Good morning, ladies and gentlemen. Good morning, good morning. How you guys doing today? Hopefully everybody's amazing. Mic check, we good? Can you hear me? Am I booming in your ear? I hope. Good morning, D-Rock, Snorri. Nice to see you guys. You guys ready? Let's do this today. I'm feeling wound up today. I'm gonna warn you guys right now. I'm feeling feisty. Good morning, Dwight, Debbie, Ron. Guys, we're gonna have some fun today. We are going. Good morning, Dano. We're going to do the same darn thing we did yesterday and the same thing that we're going to do tomorrow, guys. I want you focusing on advantages in this classroom. This classroom is designed to teach you to read your indicators. Um, I'm going to teach you what they mean, right? I'm going to give you a simple plan for success. I'm going to give you rules that happen on only two charts. Guys, I'm going to give you the pathway to consistency. That's what I'm going to do. That's my job. Your job is to make the choice on whether or not you want to follow that path, right? Your choice is whether or not you want to make it difficult or if you want to keep it simple. So, what I want you to do is I want you to make the decision right now. I'm going to keep it simple. I'm going to keep it focused. I'm not going to try to be super trader. I'm going to be a chart reader. And what you'll find is that you'll get to where you want to be a lot quicker. Um, Feisty one you are. I am today. Guys, I'm also a creature of habit. Have you ever noticed? Is anyone else like me? I woke up 10 minutes late today. That 10 minutes jacked my routine completely. It did. It messed up the time that I typically get my first cup of coffee. It messed up the time that I look at the news. It messed up the time that my charts load. It messed up the time that I set up for this classroom. And guys, I didn't trade this morning because I was one step off because I hit the snooze button today. It's a little sleepy. Um, if you ever have a morning like that where it doesn't feel right, keep it on sim, right? I'm a creature of habit. I really am. Make sure. Oh my gosh, Bobby. Very nice. I'm serious. I'm going to come down and we're going to fish off of that pier. Um, you are not going to be that far from me. Guys, if your habits get sideways, if you lose sleep, if you tied one on last night, rule number one is don't trade if you're not feeling it, right? Um, it's okay. I just wanted to tell you that. Good morning, Indu. Nice to see you in here. And a lot of us forget that. We feel this obligation to be in every move, to be in every trade, to always be on, right? Guys, if you're not feeling it, stand up and walk away. It's okay. That's why I take breaks in the middle of classroom, because sometimes you just got to stretch your legs. So allow yourself to be a little human, but go to forexfactory.com in the morning, guys. Go to forexfactory.com and let's see if there's any news going on. Today is Tuesday, September 19th. They talked about building permits at 8:30 a.m. And you'll notice that it did squat to move the market. It was medium impact. It had the opportunity to potentially make it go a little sideways. Good morning, Sydney. And it never did. There was never any news that did anything crazy. But we knew that it was there. We knew the potential was there, guys. And that's what forexfactory.com is. It's just make sure these high impacts, guys, these can make the market go crazy. FOMC days, those are so much fun to watch. They are no fun to trade because the market spikes erratically for like an hour and a half. It's nuts. That's the day where you plan on going and swinging your golf clubs rather than sitting there hoping that you can catch a trade when the market's going nuts. And then everything that I talk about is in the education page, guys. Everything that I talk about comes from the tutorial section. There are no secrets with Nexgen. I don't want to keep any secrets from you. I want you to have every bit of information that you need to be successful. And guys, I'm a firm believer in foundational education. I'm a firm believer in creating a base, creating a solid foundation, and then growing from that foundation. Um, for those of you old enough to remember, there's a Monty Python, the Holy Grail, and he talks about they built a castle in the swamp and it sank, and then they built another castle and it sank, and they built another castle and it sank because the swamp's not a good foundation. Good morning, Chef. Good morning, Sydney. Can't remember if I said good morning to Sydney or not. Um, and it's funny and it's humorous, but guys, it's so true. If you don't have a solid foundation, you don't have anything to grow from, right? Just like a relationship, you create that solid foundation, you create that trust, you create that awareness, and then you just kind of go from there because everything else tends to open itself up. Guys, we're going to build that foundation with a high probability trend trade. And a high probability trend trade is a trade that wins typically 70 to 80% of the time when you follow the rules. It's a trade that teaches you to become a chart reader. And becoming a chart reader is so important for day traders because it's 90% of what you do during the day. Have you ever taken a day and like 5 trades later, the day's over, and you're like, oh my gosh, I'm up $1,000. It seemed effortless. Holy smokes, what a great day. And then if you take in the day where it seems like there is 800 trades and you're down $1,000, guys, there's a distinct correlation there. 90% of what you do should be sitting on your hands waiting for advantages. Using your chart reading to determine if it's time to get into a trade. And your chart reading is going to help you identify 3 key elements. Where the market is likely to continue. This becomes your entry for the high probability trend trade. Guys, this is your first 20 days with Nexgen. 20 days focused on getting into the market where it's most likely to continue. Because when you do, when you get into these trades at the correct spot, it creates manageable trades. It creates trades that are easier to take profits on, that have less risk. So focusing on where the market is likely to continue, you're going to understand where the market is likely to go. It's going to help with profit targets as your plan grows. And then where the market is likely to stop. Guys, this does 2 things for us as next-gen users. The first thing it does is it keeps you from trading into areas where the market may reverse. And let me show you an awesome example of that, just live and in the moment. We knew where this big red line was, and I want you to see how long you knew that it was there. It started at 11:45 last night, 2 in the morning. Where was it at? Right there. 11:30 last night. We knew that there was a Fibonacci area there. This morning, price went to it to the tick. Guys, this is areas likely to stop. And these areas are going to keep you from throwing your money away in the market where those deep pockets investors may be reacting. So you're going to take this little culmination, 3 very key elements, where the market is likely to continue for entries, where the market is likely to go for profit taking, and where the market is likely to stop to not take that last trade. To respect that this is where the people that move the market are reacting. And then that likely to stop area, that termination condition as we call them, becomes the anchor for the highest probability trend trade. When a termination condition creates a reversal in the market, when that market goes from up to down or down to up at one of those key areas, the trend trade that follows it is typically the highest probability trend trade that you can take. So this is what we're going to focus on, guys. We're going to take our first hour of classroom. And for those of you that are new, Alinsky, I notice you're new in the class. Welcome to the classroom. We're going to spend the first hour talking about rules. David Bout, nice to have you back. We're going to talk about rules for the first hour. Guys, I say simplicity a million times a day. I really do. I want you to embrace the idea that it can be simple. This high probability trend trade, guys, this foundational, the base for your education, the focus on your entries, 20 days, only has 3 rules. The 3 rules create 3 advantages. The first rule will give you the advantage of momentum. The second rule will give you the advantage of a clear path. And the final rule is going to give you the advantage of an entry area, that point where the market is most likely to continue. Guys, these 3 rules are the recipe for a trade. These 3 advantages are what gets you into a trade. So your chart reading identifies the rules being met, and then you look for the opportunity to enter where the market is likely to continue. You can't put the horse before the cart. You can't look for an entry area if you don't have momentum and a clear path because you're likely to get run over. So we're going to focus on 3 rules, 3 advantages. And guys, every time I talk about your charts, every time I talk about your trades, I go back to these 3 advantages. I go back and we look for them to be present or we look for the absence of them. And the way this classroom works, you newer users, is you're going to post pictures and we're going to have a conversation about everything that you see. You get a private session every time you post in the room. So 3 rules are going to happen on 2 charts. 2 charts are all you need. Two charts keep it simple. Two charts keep it focused. And your large chart, guys, your large chart is going to give you 67%, I rounded up, of the information that you need. Your large chart is going to define direction. You're going to be able to trade with the trend because of what the large chart tells you. Your large chart is going to define momentum, meaning that you're going to have the advantage of momentum each and every time you enter a trade through the large chart. And then your large chart is going to define areas, those areas where the market is likely to go, as well as those areas where the market is likely to stop. Guys, this is a broad stroke of a brush. And this broad stroke of a brush is the general opinion of the market. And I'm going to share this. I haven't done it in a while. Ron, here comes Norbert. One of the hardest realizations for new users is that you're not in control. Not at all. Guys, your two contracts doesn't do a darn thing to move the market. You have no influence or impact on the market. I want you to think of the market, the people that move it, as sharks, guys. These are the guys with deep pockets. These are the guys trading thousands of contracts. These are the people that create direction. These are the people that create momentum. These are the people that identify and recognize those key Fibonacci areas that you now have the advantage of seeing. I want you to just make yourself a remora. Be that little fish that swims next to him. And when this guy gets work done, we're going to take our part, right? We're going to take a little bit from the advantages that they create. There's the guy that tried to be first. He got sucked up into that mouth. He's what we call an appetizer. And I know it's kind of silly, and John Novak's like, we're not bottom feeders. We're not bottom feeders, but we wait for advantages, guys. The sharks create the advantages of momentum, direction. They identify the areas. We're going to be the remoras. We're going to use a small chart to get into the market. Good morning, PFI, where it's most likely to continue, guys. We're going to take advantage of everything that they've created for us, and we're going to capitalize through rule number 3, which gives us that entry where the market is likely to continue. So 2 charts, 3 rules, guys. That's our focus for the first hour, hour and a half. And I want you to embrace the idea that it doesn't have to be difficult. And I also want you to embrace the idea that you have 2 options as a day trader. Either your rules are met or they're not. Everything else is opinion. And guys, opinion costs you money. So this is how you're going to get to where you want to be. This is for you newer guys. Post your trades in class, every one of them. Every one of them. I had someone send me an email and they said, I suck, I'm no good, this stinks, I can't get that stuff done. I'll save it there. And I said, but you've shown me 50 winners in classroom and maybe 3 losers. How on God's green earth can you suck? And what it is, guys, is people hide their losers, right? They hide their problem trades. They hide their mistakes. We have this ingrained sense of shame as humans. Guys, I want you to give me everything. I want you to give me your good and your bad, your ugly, and I want to see everything that you're doing because when you post trades in class, we're going to have a conversation. We're going to talk about those 3 advantages. We're going to talk about what probably led to success. We're going to talk about what may have been a hindrance. And together, you and I are going to work towards getting you to becoming a confident trader. But if you don't give me the opportunity to see what you're doing, I can't help you. So give me that, guys. Give me those charts, and then use your spreadsheet. Um, what I have found, and certainly this isn't everybody, is that traders are one of the laziest groups of people that I've ever met in my life. We hate work. We did so much work to get to the point to where we could start to learn day trading that we don't want to do it anymore, myself included. But guys, you have to use the spreadsheet. You have to put your trades in there. You have to create a trade journal because what you're going to do is every morning, you're going to go back and look at what you did yesterday. And when you do that, it's going to be mind-blowing because you're going to see what worked and you're going to see what didn't work. You're going to see what made you feel easy, kept you relaxed, and you're also going to see what felt forced and made you nervous. And guys, this little bit of study, this 5 minutes that it takes to do each and every day, is going to make your learning journey so much easier. It's going to accelerate it. And it's going to put you in the right frame of mind for today's trading. Um, so what worked? Typically, rules work. Consistency works, right? What doesn't work? Trading in determination conditions, those areas that are likely to stop the market. Fighting the trend typically doesn't work. And if you use this spreadsheet and that little study every day, you're going to begin to see these patterns easily. Oh, this is working for me. This has worked for me the last 10 days. But you're also going to recognize the patterns that don't. You're going to recognize the problems that you're creating for yourself through breaking the rules. And guys, my talent, it's not teaching indicators. It's recognizing the patterns in you. So you're going to have a habit of maybe jumping in early, or maybe trading in determinations, or maybe jumping in late, right? Getting out early. If you give me these pictures, I'm going to recognize these patterns, and every time we talk, we're going to recognize them. We're going to fix them. We're going to fix them together. 15 hours every week, guys. My only purpose in life is to get you where you want to be, is to give you the tools that you need so that you can learn how to use them. And that's what Nexgen does, guys. We have the best software in the world. You just have to learn how to use it. So post in class the same way Ron and Jose did, the same way Sydney did up top, right? Little bit of study each and every morning. And I'm telling you right now, the people that go through that study process every morning have told me, they send me messages. Man, Mark, I got in this habit, and it's amazing how much easier it is going into the day because I know exactly what I'm looking for. We're going to spend the first hour learning the trigger lines, learning the rules for when it's okay to trade. Your job is to simulate, to use that monopoly money without fear or anxiety. Absolutely, Ron. Guys, the people that post the most get to where they want to be the fastest. But you're going to simulate, you're going to practice, and you're going to screw up. You're going to make mistakes. You're going to break rules. Guys, I want you to break rules. I want you to make these mistakes because what happens is every time you break a rule or make a mistake and you post it in the room, we're going to talk about why that rule was so important, the advantages that went away, and it's going to click, right? It's going to click every day. You're going to be like, "Oh, okay." Don't practice the wrong trades, guys. Don't jump in just to try to make your monopoly money go up. It's not going to impress anybody. And don't hide losers. We're going to simplify. We're going to focus on the entries for a high probability trend trade. That's our first hour, guys. That's it. Great entries create manageable trades. What looks are you going to commit to? Well, it should be the rules met, right? That's your only option. It's the only thing you're in control of is whether or not your rules are met. And guys, we're going to learn those looks so that they become easy. And you're also going to use the spreadsheet to learn the looks so they become easy. This is my personal spreadsheet, guys, and these are about 250 pictures of entries. Just entries, 250 pictures of getting into the market when there's advantages present. I'm going to give you my spreadsheet right now. I would encourage you new users to start looking at these pictures because the more you look at them, the easier it becomes. The more you put that perfect look in your head, the easier it becomes. The easier it becomes to catch it in the moment. It's almost as though it slows down the market. For a lot of you, you're like, oh my God, it's so fast. I can't keep up with it. Tom Brady was in an interview a long time ago, and the interview was talking about brand new NFL quarterbacks and how they're like, oh, it's so much faster than college. So much faster than college. And then Tom Brady's like, yeah, you know what? After 10 years, it's like slow motion. He goes, I almost know exactly what's going to happen. I just throw the ball where it has to go. You will get that way as a trader. To well, that market, you'll anticipate your entries. You'll know exactly where you're getting in, and you'll have a plan for exit. And that's through simplicity and understanding the trigger look. So, guys, I want you to embrace this plan to get there. If you need help taking pictures, post it in the class. I want you to raise your hand and let me know. But we're going to focus on rules, guys. We're going to look at 3 rules on 2 charts, and then we're going to start with our large chart. Our large chart, rule number 1 says that I must have strong trigger lines. And the only way that I can have strong trigger lines on a large chart is if I'm trading with the trend. It's the only way. You can't have strong trigger lines without trading with the trend. So let's identify trend. If the background is green on your large chart, Alinsky, I like saying that, you're going to love how easy it is. We're in an uptrend if the background's green. We're only looking for rules to be met for high probability trend trades long. If the background is red, we're in a downtrend. We're only looking for rules to be met for high probability trend trade short. This is the easiest lesson you will ever have becoming a day trader, is identifying the trend And then the key is it's up to you to commit to trading with the trend. So let's look. Guys, this is the S&P. Are we in an uptrend or a downtrend? Help me out. Alinsky, what do you think? Uptrend or downtrend? D-Rock, Gary, Jerry, Alex, Debbie, anybody. What do you think? Down, right? The background's red. I'm only looking for rules to be met for high probability trend trade short. How about crude oil using that most current bar? Look at all of this green. But what direction? It's down, absolutely. Only looking for rules to be met for high probability trend trade short. And then once again on the NASDAQ, we're in a downtrend, guys. It really is that easy to recognize trend. And that's really going to be the first advantage that you give yourself. And then once you have it, let's get strong triggers. Let's get the advantage of momentum. In an uptrend when the background is green, my small triggers, these solid lines, two lines work together to create one trigger. Solid lines, small triggers, have to be above the large triggers. The large triggers are the dashed lines. And once again, it's two lines that create one trigger. So it's not two small triggers and two large triggers. It's my small triggers and my large triggers. And when my small triggers break above the large triggers, create this space. Everything is wide and angled in the direction of the trend. This is your strong trigger look. This is rule number one being met visually. When you have this strong trigger look, it's like scissors open, ready to cut, right? The odds are favorable for the market to continue up. This is the advantage of momentum, creating a situation where the odds are favorable for the market to continue up. And in a downtrend, it's the exact same but opposite. You're not learning two looks, you're just flipping it on its head. Small triggers are below the large triggers. The large triggers are wide. They're angled in the direction of the trend. It's the space created between small and large that lets me know that the odds are favorable for the market to continue down. This is rule number one defined, guys. This is the picture that lets you know that you have the advantage of momentum. When you have the advantage of momentum, this is when it's most favorable to buy or sell a pullback at an area on that smaller, faster chart. Guys, on the large chart, you're going to see these tails. You're going to see these wicks. That's a smaller chart refinement process right there. You will be able to nail where that tail is most likely to happen. That's your area where the market is likely to continue through using a smaller, faster chart. And this becomes where you're seeking out those short trades, those long trades. David Bout, did you notice that I never said anything about the candles? That I never said anything about the bars, right? There's a reason for that. Simplicity. If the small triggers separate from the large, you have momentum. It's really that easy. And David, thank you for saying that because it shows how your brain is going to say there's no way it can be that easy, Mark. There's no way that a simple separation is the absolute best look, the best momentum ever to take a trade on a smaller, faster chart. But the reality is, David, that it is. The separation means that it's time to look for the rules to be met for the trade. We have the advantage of momentum. And then when the smalls return back into the large chart, that's your weakening of the large triggers. You no longer have strong triggers, they're weak. And anything can happen up or down, guys, and the advantage of momentum is gone. So how's that for simple? Smalls above the large, the space created, odds are favorable. You're going to hear odds favorable momentum in the room all day long. This is where we're going to look for the opportunity to potentially go with the trade. Smalls work their way back inside. Now I have weak triggers. Anything can happen. And look at that. It precedes a reversal, doesn't it? So this is going to happen all day long, guys. You're going to see this all day long. You're going to see rule number one met, and then you're going to see rule number one not met. You're going to see those weak triggers. And this is where you have to make the decision that I don't have the advantage of momentum. Therefore, I'm not going to look for any more trades. I'm just going to sit on my hands and wait. Here they weaken. The market reverses after that weakness. Creates odds favorable. There's one of those tails. Guys, you're going to be able to pinpoint where that tail is most likely to form on a smaller chart. This becomes your entry for the high probability trend trade. And it continues up until they weaken and it precedes a reversal and we look for the odds favorable momentum again. Guys, you're going to repeat this process throughout the day. It may happen 5 times, it may happen 50 times, but you're going to be ready visually when that momentum is strongest to jump, to get ready to take that trade. And then sometimes, and we saw this yesterday in quite a few markets, they consolidate. There's a fight between buyers and sellers, guys. It is a shark feeding frenzy, and they can't agree on which direction the market should go. During times of indecision, you're going to see that the small and large don't agree. You're going to see that the small and large don't agree with the color of the background. This is a huge fight that Nexgen users don't have to be a part of. You don't have to jump in the middle of the shark tank, guys. Let them fight it out. Let them work it out. Let them establish the trend and then create momentum that goes with the trend. And then we'll start looking for the advantages again. This is where new users try to predict. This is where opinion overrides rules-based decisions, guys. When the market isn't giving you what you need to take a trade, you'll begin to create this fantasy in your head that you understand exactly what's going to happen, and you'll take trades based on your prediction if you're not committed to following your rules. So we can avoid that mess through the simple idea that trading with the trend is our friend, that trading with momentum is the first advantage that we assist on. Is everybody cool with odds favorable momentum? Here are my small triggers, whoops, are inside of my large triggers. Is it odds favorable momentum or is it anything can happen, guys? Are we looking for shorts or are we sitting on our hands and waiting for the absolute best of the best look? The answer is you're waiting because 90% of what you do is waiting for advantages. What do you guys think? Odds favorable momentum to the downside? Does everybody see it? Smalls below the large are wide. I'm using this most current bar on crude oil. Give me a Y if you see it, please, guys. Odds favorable momentum is in play. This is a market that's likely to continue in the direction of the trend. This is the market that's being pushed down with an awful lot of force. And the bar hasn't even completed, guys. But look at that. There's the top of the tail. You're about to learn how to get into the market right there, but not yet. Because first, with the advantage of momentum, we have to make sure that we have a clear path. We have to make sure that there's nothing in the way, guys. These are those areas that are likely to stop the market. These are what we call termination conditions. Termination conditions are nothing more than a reaction spot. And I'm going to show you what I mean. Hopefully my pictures are still in here. When price reaches an area, guys, this is where the sharks react. This is where the deep pockets investors react. This is where decisions are made. And there's 3 scenarios that can happen. Um, there can be so much momentum in a move that the fib just breaks and price rips through it. That's awesome. Areas break all the time because if they didn't, we'd be caught between 2 lines for the day. Sometimes these areas can reverse the market. Price reaches it, and we saw a couple pictures of that this morning. To the tick, and the market reverses and heads the other direction. And then this is pretty common. The buyers and sellers get into this fight, and this is what we call consolidation. When they reach this key area, sellers take profits, buyers enter positions, sellers add on to positions. All of these decisions made by the people that move the market happen right here at these key areas. And guys, I'm telling you, the further away from these key areas you are, the smoother your trades tend to go. And I'm going to start giving this lesson on termination conditions. I want you to see the white box right here at a key Fibonacci area. Look at what a smaller, faster chart looks like right in that white box. Guys, this is untradeable. Next-gen users never have to get caught in this area. You never have to hope that a market does something. You can simply wait for the termination conditions to not be true, because what happens is decisions are made at support and the buyers took over. And it was easy all the way up to Fibonacci resistance where the fight ensues. The buyers ultimately win, and then there's another easy opportunity, guys. I want you to embrace the idea that everything that happens in between these 2 points doesn't have to be yours. It doesn't have to be your money. The goal of day trading is to make money. And you make money when the advantages are present, guys. That's the termination condition keys. So we're going to make sure that we never trade into them. These areas that can reverse the market, guys, are divergence highs and divergence lows. And what divergence means for my new people, there was a loss of momentum. When the market went from up to down or down to up, the momentum didn't follow. That's all it is. It uses MACDs in the background. You don't have to do any calculations. But you'll notice that this cyan line prints right from the base of the pivot if the momentum is lost, if divergence is true. A divergence line up top, this magenta line, will print from the pivot. But guys, it won't print until the third bar. So these aren't termination conditions. These are just losses of momentum. We'll talk about when they become termination conditions. We're also going to look for red Fibonacci resistance, those key areas where reactions happen, blue Fibonacci support, or yellow one-to-ones. And if you're brand new, this is also kind of what you're looking at on your chart. It's a great key to the map. So in order to have a termination condition, guys, there are two things that happen. And I'm going to go to the tutorial section and I'm going to open up the area on tops and bottoms. And I'm going to show you how to determine whether or not one of these lines is likely to reverse the market, whether it has the potential to break. But everything starts with price reaching the area. The dynamic Renko bars, the candles, whatever you want to call them, they get to the area. In this case, they get to Fibonacci support. And I know because I was paying attention in class that when price reaches an area, decisions are being made, right? So price reaches the area, the only thing that you have to do is ask yourself where are the trigger lines. If price reaches Fibonacci support and the trigger lines remain above, no more short trades. And what that means is that we're not going to hope that this area breaks. We're simply going to sit on our hands and wait and see what it does. It may create a bounce that's untradeable. It may just smash right through, or it may just sit there and dance for a while. We don't know, except that you're not in control. But if price reaches an area and none of the triggers break, you're at a termination condition. And we're going to show a couple examples of that, of termination conditions being true. Here's one of those divergence pivots, right? The market goes down, the market goes up. Here is that cyan line letting me know that there was a loss of momentum. Guys, this is not a termination condition. This is just a loss of momentum. The trigger lines made it through the area, so this is just a pivot. When price reaches the divergence low, I want you to embrace the recipe. When price reaches the divergence low and all of the trigger lines remain above, now it's a termination condition. Now we've reached an area that may reverse the market, that may create an unfavorable bounce, that may just produce indecision, guys. This termination is what we call a pivot stop out of a prior divergence low. A PSO is what you're going to hear it in class. Pivot stop out. It means that this pivot, the buyers took over, the sellers pushed back, stopped them all out, and then it goes the other direction. Guys, we can see this happening in the moment. We know not to take any more short trades into it, right? And if this termination creates a full reversal, now we're going to call it a strong bottom. And a strong bottom is the precursor for the highest probability trade that you can take. Next picture reminds you that 90% of what you do is sitting on your hands. 90% of what you do is just reading your indicators, guys. Price reaches resistance and all of the triggers remain below. No more long trades. Guys, I'm going to ask real quick. Give me a Y in the room if you're with me on the recipe. Price reaches, no triggers through, no long trades. It really is that simple. Price reaches this blue line, Fibonacci support. No triggers through, no trades. It can be that simple if you allow it to be. Nothing to do long, nothing to do short. And then price comes back up to resistance, to that divergence high line. And it produces one of those pivot stop outs of a divergence high. It goes above it, the triggers stay below. I also have two areas of resistance. All of the triggers remain below. Guys, this is a good looking termination condition. This is very likely to stop the market. And if it does, and it reverses the market, and it gives me odds favorable momentum, and I see one of those tails, guys, this strong top sets you up for the highest probability trend trade that you can take. The hardest thing that you will ever do is absolutely nothing until it's time to do. So we're going to learn the rules. We're going to recognize the looks and make sure that you never get caught on the sidelines when this highest probability trend trade sets up. And new users, I want you to notice that most of the people that told me yes on the understanding have green dots next to their name. They've already bought the software. They've already committed to the software. New users, if you sit in the shadows, if you're going to play your shy card, it's going to become more difficult for you to get to where you want to be at the rate you want to be there. So I want to see all of you people with the black circles next to your name, the black boxes next to your name, get into this classroom. Embrace the idea that I'm here for you guys. Price comes down with odds favorable momentum, screaming, and it reaches these yellow 1-to-1s. Next-gen users know not to take the next short trade because the trigger lines are above the area. This is a termination condition. Look at the indecision created at the key areas. If this termination condition creates a full reversal, the background goes green, the large triggers go green, you ultimately end up with odds favorable momentum. There's that tail for the highest probability trend trade that you can take, guys. This is how you identify termination conditions. This is when the path is no longer clear. This is when rule number 2 isn't met. And this is when next-gen users are going to sit on their hands and wait for the rules to be met. Sydney, the divergence is true not when price reaches the area. Let's look at the picture. Great question. Divergence is true when the line prints, meaning that the calculations are done to determine that momentum didn't follow price. Give me a Y if everybody's with that. This line doesn't print. I'm going to show you where it prints. I'm going to take a picture of it. This line doesn't print until right about here on this bar. So this isn't a termination condition because price did not reach that line. Are you with me so far, guys? It's when price comes back to and reaches that divergence low that we go through the calculation, where are my triggers? So this is just a loss of momentum. This is a termination condition. Does that make sense, Sydney? Great question. Awesome. So just a loss and now a termination. That's an awesome question. That's a very common question. D-Rock, you ready? You're going to like this one. They're two different charts with different swings because of different bar patterns. So the mathematics that create the calculations when you have a 5-1 on this chart, it's coming from the swings on the 5-1 chart. And when you have 1-to-1s on this chart, it's coming from the swings on this chart. So because they're two totally different charts, one's a larger, slower chart, one's a slower chart, you'll see that there will be different divergences. There will be different 1-to-1s. And guys, I hope some of you caught that one because we recognized where the market was likely to go, where it was likely to continue. That's your whole day right there. That's a $600 plus move that fit the rules. We're going to talk about that entry too. But first we have to make sure that we understand termination conditions because trading into areas that might stop the market, bad news, guys. So two scenarios for brand new users. If none of the triggers break through the area, the path isn't clear, the area is not broken, no more trades, sit on your hands, wait. So when is the path clear, right? We got to know when the path is clear. We have to know when the rule is met. When price hasn't reached an area, price hasn't gotten to one of those key Fibonacci areas, it's still off in the distance, then we have a clear path. But we have to make sure if we reach an area and none of the triggers go through, we're going to consider that area of resistance broken when both the small and the large get above the area or below the resistance area. Then the path is clear. Then we start looking for those rules to be met. And guys, we're going to embrace that clear path, small and larger through, right up until we hit the next key area. So let's see if we can find an example on crude oil. And we'll keep it simple. Price reaches resistance. Absolutely no trigger lines go through. Guys, no long trades. As it comes up, when both the small and the large break above resistance, resistance begins to behave as support. Now we have a clear path. And it really is that simple. No triggers through, no trade. Both triggers through, your path is clear. And then areas with the potential to break. Guys, I want to cover this. Areas with the potential to break. When you have small triggers breaking through an area, um, it must have odds favorable momentum. It must be the absolute best trigger look that you could ever hope for. But when the smalls break through and the large don't, guys, this is where areas have the potential to break. I want you to embrace the idea that strong triggers break areas. When the areas have the potential to break, you don't have a clear path. And that's the key right there, guys. No triggers, no trade. Small triggers with odds favorable momentum. There's the potential to break, so we're going to be on our toes because it's no longer high probability because the path isn't clear. And your best case scenario, especially as a new user, is that smalls and large make it to the other side of the area. Then the area is broken. You can see that resistance begins to behave as support. You can also see that we have odds favorable momentum. And just to throw it on top of that, there's one of those tails, one of those potential entries for that clear path, odds favorable momentum trade, guys. Is everybody good with that? Rule number 2 is designed to keep you safe. I can't say that enough. Rule number 2 is designed to keep you out of trouble more often than not, to keep new users from trading into areas that may reverse the market. One more termination condition that we're going to talk about, guys, and this is a small chart, the only termination condition that I'm going to recognize on a small chart. And I want you to remember that your large chart's a broad stroke of a brush, right? It's slow. It moves slowly. There's only one bar giving us all this great information. Your small chart is going to take that large chart, that one bar on a large chart, and it's going to refine it into like 15 to 30 bars. This one bar on a large chart is 15 to 30 bars on a small chart. So this final termination condition, you're going to recognize, whoops, on a small chart, and it's going to help you identify when the large chart may be turning from seemingly nowhere. The path is clear, the triggers are down, the trend is down, and the market goes up. The momentum is odds favorable, the path is clear, we haven't reached the area, and the market comes down. This final termination condition on a smaller, faster chart is going to help you recognize that change before the large chart makes it visually recognizable. And that's 3 divergences in the same price range. 3 losses of momentum in the same price range. Hey, good morning, Mary Rocks. Nice to see your smiling face in this room again. 3 divergences, 1, 2, 3 printings of these cyan lines from a low, or 3 printings of those magenta lines from a high. This can turn the market, guys. This can be a termination condition. This can create a push in the opposite direction, but it takes away your advantage of a clear path. It becomes more powerful when the small triggers work inside of the large triggers, when you get those anything can happen triggers. So 3 divergences on its own is a termination condition. 3 divergences with weak triggers becomes even more powerful. And 3 divergences with weak triggers and the third pivot is higher than the previous from a low, or lower than the previous from a high, becomes more powerful still. Not because it broke the fibs, Sydney. So these 3 divergences might happen in only 2 bars on the large chart. So you'll see this look from a low or this look from a high when your large chart appears to be turning from nowhere. It's going to help you identify this change before it happens. And then, Sydney, we can add power to, let's say, price reaches 1-to-1s, and none of the trigger lines break through, and then your small chart also has 3 divergences there. It's adding fuel to the fire on that termination. Does that make sense? When you see those 3, it's going to help you identify this change before you'll ever see it on the large chart. And then the cool thing is, guys, is when you start learning the management side of things, if you're in that perfect short and a third divergence prints, Well, now you know to get out of that trade, to not sit and hope. You know that the conditions are changing through that smaller, faster chart. And this becomes an awesome management tool as you grow with the software, as you begin to manage. So that's my termination condition sections, guys. And I really spend the longest amount of time on termination conditions because that's the one that typically needs the most study, I think. That's the one where hope takes over more than any other scenario, hoping that an area breaks instead of letting the indicators tell you that it's broken. Large chart has momentum, odds favorable, separation of the triggers. Large chart has room to the profit areas. The termination conditions are false. We haven't reached an area that is likely to stop the market. So now we just need to find an entry. We need to be able to get into the market where it's most likely to continue. And guys, this is really where the magic happens. How often rule number 3 sets up beautifully floors me. And I think that this is where the advantages really come to be when you have that momentum, when you have no termination conditions. This is the look on that smaller, faster chart. You should have strong triggers. Of course, the trend is going to be the same trend as the large. Um, and rule number 3, to identify that area where the market is most likely to continue, says that you're going to use a limit order, meaning you're literally going to wait for the market to come back to you, and you're going to use a limit order to buy or sell a pullback. And a pullback means that when everything is screaming up on the large charts, you're going to let your small chart push down. That little fluctuation in price, this is what we call a pullback. A small retracement in price counter to the underlying trend. Next-gen users are going to be able to pinpoint where the market is likely to continue by buying a pullback in a long trade at an area, fibs, mid-bands, or yellow one-to-ones, inside of favorable large triggers. And favorable large triggers means that your large triggers and your synthetic triggers on that 5-1 chart are overlapping one on top of the other, creating the smallest window of opportunity possible. And this is how you're going to manage your risk long before you ever manage your profits, guys. Insisting on waiting for the pullback to the areas inside of favorable large triggers, letting those triggers be tight one on top of the other, because it's going to give you the least amount of risk as you get into a trade. But when everything says up, you're just going to look, where are my areas? Where are my triggers? Are they favorable? Do I have fibs, mid bands, one-to-ones that are falling within? And if you do, we have to wait for the pullback. We have to wait for that little push counter to the underlying trend. And it begins with a reversal bar. New users love to jump in. They get scared that the market's going without them and they just jump in. And I see a lot of new user entries right here. And then that reversal bar prints, guys. This signals the beginning of the pullback. Remember that we're trading two charts, right? The large chart defines areas, defines momentum, defines direction. This is what the large crowd wants to have happen. We're going to take advantage of the small crowd. When we enter with a pullback on the 5-1, we're anticipating the large crowd to win against the small crowd. Small crowd forces a pullback. That pullback is going to get us to our entry, guys. And when this reversal bar prints, I want you to take a drawing tool and I want you to draw from the highest point of the triggers to the lowest point of the triggers, and I want you to look at the areas that are within. These large favorable triggers, these synthetics, one on top of the other, in a long trade are coming up like a shark about to breach, guys, and they're going to swallow anything in front of them, and we're going to take our trade from what falls within. These lines create bounce points. So when this reversal bar prints, because of the momentum on the large chart, because of the clear path, nothing to bounce off of on the large chart, you're going to right click on your chart and activate a limit order at the top of the window of opportunity, at the top, highest point of support. And that's where your entry comes. That's where the market is most likely to continue. And guys, this is where you have to accept that you're powerless. It's either going to get there or it's not. You're not in control of that. It's either going to fill you or it's not. Your opinion means nothing to the large crowd. Nothing. But you are in control of whether or not you have momentum, and you're very much in control of whether or not there's a termination condition, and you have absolute control on whether or not you make the decision to enter at the area inside of favorable large triggers. And if you do, this is your high probability trade entry, guys. And let's go through the process. The reversal bar prints. At the time of the reversal bar, I'm looking at my large triggers, my synthetic triggers. They should be one on top of the other. And that's kind of where they are, from the top to the bottom. But my trades don't come from the large triggers. They come from the areas within, which means that my window of opportunity, the point where the market is likely to continue, extends from the highest point of support to the lowest point of support inside of favorable large triggers. Give me a why if you're with me on this process so far. And guys, especially my brand new people, the odds of you being great at this on day one are slim to none, right? That's a lot to take in on day one. But I'm telling you that it repeats itself every day on every market. And by day three, it gets easier. By day six, you start anticipating your entry before the reversal bar. By day 20, if all you focus on is entries, guys, you're in at the point where the market is most likely to continue. And then here's the part about being a day trader. Give me just 1 second. Dwight, and we'll talk about it for sure. Here's the hardest part of being a day trader, guys. When the rules are met and the market pulls back and you enter at the top of the window, this is your trade and you're excited and you're in and it feels good and your palms get sweaty and your stomach gets nervous, right? I sure hope I win. And then the market goes to the bottom of the window, and this is where most of my new users jump ship. They say, "Oh my gosh, this trade isn't working. It's going against me. I'm down $38. This is the worst day ever." And they get out while the market is still inside of the window of opportunity. And the reality is that's still an area where the market can continue from, right? So we're building trust in the rules. We're building trust in the idea that it's a window, not an exact price. Next-gen users have the ability to manage their risk before they ever manage their profits, guys, and we're going to do that with protective stops. We know that we have the advantage of momentum, and we know that we have the advantage of a clear path, and we know that our entry at the top of the window is the best spot to get in for a high probability trend trade. And if you guys were paying attention earlier, we'll just cover this one. You know that when those advantages are in place, it's a trade that typically wins 70 to 80% of the time. And those of you that excel at math understand that anything that wins 70 to 80% of the time is mathematically obligated to lose 20 to 30%, right? 20 to 30% of the time, the market is wrong. That's it. It doesn't mean that you took the wrong trade. It doesn't mean that you made a mistake. It just means that the market is wrong, guys. And this is a reality of trading. Small losses are a part of a positive equity curve. It'll be rare to have a 100% winner day. But we protect ourselves by putting a stop below that window of opportunity where the market shouldn't go. And if the market shouldn't go there, we don't want to be in the trade if it does. And guys, this is where your stops come into place. This is your high probability trend trade. Let me show you some of the common mistakes that new users make as you develop trust. The first one, of course, is jumping in too soon, right? And when you jump in too soon, your stop still needs to go where the market shouldn't. And it's unmanageable. It's too much risk. And the other one I see is you'll get these fluctuations on the 5-1 chart. Remember, it's a refinement chart. And one bar doesn't define it, guys. It's the pullback to the area. But new users will see it start to go up. This is the fear of missing out. It's a very real phenomenon. And I'll see new users take this entry right here at the top tick of that bar. And then the market comes back and does what it does. Jumping in to a trade doesn't guarantee a winner. All it does is it guarantees a smaller or a bigger loser if it's part of that 20 to 30%. And then one more thing that I want to point out, remember that it is a smaller chart. It's a faster chart. It's a refinement chart. The odds are favorable that you're going to see the small triggers turn against you. They're still outside of the large triggers. You still have odds favorable momentum. But in order to get back to that best of the best spot, we have to lose a little bit of momentum, which means that those small triggers may turn against. Guys, I encourage you new users to focus on nothing more than getting in at the best of the best spot for 20 days, getting in where the market is likely to continue. Because once you do that, once you trust these rules, you take this trade, this becomes the look that you'll never miss, guys, because 70 to 80% of the time, this is your result, right? And once it begins to go in the direction of the trade, you're going to reduce risk even more. You're going to go above that reversal bar, below that reversal bar a couple ticks. Guys, this is your high probability trend trade. And when you have odds favorable momentum, where did that happen? When a termination creates a full reversal and gives you odds favorable momentum, remember we said that you're going to be able to pinpoint where the market is likely to continue? Give me a Y if you see that that midband is right there at the favorable large triggers, right inside of the large triggers. Maybe a tick below. Guys, that's where the market's most likely to continue. This is where Nexgen users enter that market. And if I had to guess, somebody's going to show me a picture of that trade. Oh, I was hoping that would be it. You're showing me after the trade. That's where I was going to try and take a guess and look cool. Are there any questions about the high probability trend trade, guys? Are there any questions about the three rules individually or coming together? And if you're brand new, look at that. It's my first one when I start typing it. If you're brand new, guys, this is your first couple days. It feels like drinking from a fire hose. It really does. There's a lot coming at you. This is why I embrace the idea that simplicity is your key to success, guys. That understanding that three rules can happen on two charts, right? Three rules can get you exactly where you need to be. It doesn't take a lot of charts to make it happen. And then, guys, you can begin to study these three rules and develop trust and develop recognition by scrolling backwards on your chart and looking for these rules met, strong triggers, no termination, and just circle the tail. And if you circle the tail and it lines up with an area of support or resistance inside of favorable large triggers, well then guys, that's your best of the best look. That's the look that you want to put into your spreadsheet under your favorite looks. This is exactly what it's going to take me to get into the trade. And then when you post it in the room, I'm going to give you confirmation that it was in fact the best of the best look. So I like to do this. Before we get out of high probability trend trades, and I'm not sure how many opportunities there were on crude oil. I'm going to check and see if we had one right here. Well, goodness gracious. Odds favorable, nothing in the way, and it pulls right back to resistance inside of favorable large triggers. And then, guys, there's one of those management opportunities. 1, 2, 3 divergences lets me know that it may push higher, and it did. There was one at 925 on the S&P on crude. We'll take a look. Scrolling back, scrolling back. Let's go to crude oil, 925. And that may have been the one that I was talking about. Right there, right? No worries. That's perfect, though. Let's do an entry. Let's take off some noise. And I'm just going to walk through the entry process, guys. Let's take away our cheater circles. And we'll do it like this. We'll leave the tail so that you can see the correlation. Does everybody see that we're in a downtrend? That's the first thing I do. This is how I go through the process of looking for a trade. What direction is the market trending? The market is trending down. Therefore, I'm looking for rules to be met for high probability trend trades, which means that the first thing that I'm looking for is odds favorable momentum. I want to make sure that I have the advantage of momentum through strong trigger lines before I even think about going through the rest of the process. Does everybody see that I do in fact have odds favorable momentum? That I have small triggers below the large triggers? The large triggers are wide, they're angled in the direction of the trend. Guys, I get this information from the most current bar. The trend is down, the momentum is down, and I haven't reached a key Fibonacci area. There's nothing in the way, so I also have the advantage of a clear path. Please give me a Y in the room if you're with me so far. And I'm talking to my Alinskys, to my Davids, right? To my Chris L's, to my, where'd it go? To my Mulus. This is the best look, guys. This is the one that says there's no way I'm missing this trade if it gives me an entry. So I look to my small chart, and it is screaming down. The trend is down. The triggers are strong. My small and my large are one on top of the other. And then Dwight, what does a pinch trigger mean? A pinch trigger means, whoops, a pinch trigger means that things are changing, right? Or that momentum is going away. It's the strong wide triggers that create the advantage. There's your full reversal. And the market's coming down, and I'm fearful that it's going to go without me. And my triggers are coming down, and my mid band is right here, and the market just keeps screaming. And then it gives me a reversal bar. Hey guys, this is an important thing. On my smaller chart, price reached one-to-ones, and none of the trigger lines broke through. Is this a termination condition? What do you think, guys? Did I reach a termination condition? Should I jump ship? Should I abandon everything and say, well, I can't take a short trade because this area may reverse the market? And it's a trick question. Dwight says yes. D-Rock says no. And I like that you guys have two different answers. Guys, I always show this, and I like to show it, and I love it when it happens. And this is very normal for newer users, is that they get scared out of trades from one line on a smaller, faster chart. And this is where I want you to remember that the large chart leads the way, that the large chart defines direction, momentum, and areas. There is only one termination condition that I respect on a small chart, and that's three divergences in the same location. And at this point, I just don't have it. Does that make sense, Dwight? This used to scare the heck out of me. This used to keep me from taking a lot of great trades when I was a brand new user because I forgot that the large chart leads the way. I forgot that this momentum and this clear path says that there's absolutely nothing other than three divergences on this chart that's going to keep me from looking for an entry. So thank you for the white, Dwight, or the Y. Guys, at the time of the reversal bar, here's your job. From the lowest point of the triggers to the highest point of the triggers. See how they're overlapping one another? I'm going to right click on my chart and I'm going to activate a limit order. And I'm going to activate that limit order a few ticks below the lowest point of resistance. In this case, the only line that I have is a mid-band inside of these triggers. So watch how this giant area refines down to the point where the market is likely to continue. That point of resistance inside of favorable large triggers. So once again, I'm going to ask you guys, give me a Y if you're with me on this, because this is your first 20 days, guys. When you can catch this trade, it's going to open doors that you never thought possible as a day trader. Odds favorable, clear path, reversal bar prints. This is where the market should bounce. This mid band is going to be coming down as the market comes up, guys. It's a moving average. So as the market gets closer, I'm watching that mid band come down, and I'm going to make sure that I don't miss it. I'm going to make sure that I stay 2 to 3 ticks below, and I'm willing to get run over a couple ticks to make sure that I don't miss it. Because remember that this much momentum with a clear path means that this market is very unlikely to create a huge pullback. I don't want to miss it, but I want a bounce point. And the market comes up and the mid band comes down, and I'm in the market at 05, right there at that mid band, and it peeked its head out of the large triggers. Guys, give me a Y in the room if you're with me. You are now in a short trade with every advantage. You're in a short trade with momentum. You're in a short trade with a clear path. You're in a short trade having recognized where the market is likely to continue, chock full of advantages. And now there's nothing to do. I mean, there's nothing to do. My initial stop goes outside of the window, guys, and it's going to be 10 to or 12 to 14 ticks typically. Typically, it's 12 to 14 ticks. I know where the market shouldn't go, and that's where my stop is. I knew where it was likely to continue. That's where my entry was. And then I get a reversal bar. And here's one of the great things about this methodology is because you waited for the reversal bar, now that I have it, there's my new stop, guys. I have virtually no risk on this trade. I've gotten in at the best. Gene, Jason's unbelievable. The only stuff that he can't fix is stuff that isn't broken. So guys, give me a why. I want to know that you're good with this. You're going to have to practice it for it to get easy. Everything said go on the large chart. No problem, David. Is there something? Let's go through the whole process. So David, when I was asking if everything was cool, you never gave me an end. So thank you for giving it to me now. And we're going to back it up and we're going to go through the whole process. That's okay. So I'm going to do this first. Then let's go through it. I'm going to take a picture of the large chart and the small chart together. This is your pre-trade look, David. So the first thing that I'm going to put on here is the background is red. So the trend is down. So I'm only looking for short trades. I'm going to type out my thought process as I look at the chart. And man, I'm telling you, I was in your seat, David. My brother used to teach the class and he used to say it's obvious. And it wasn't obvious to me at all. And it used to frustrate the hell out of me. And that's why I actually asked him if I could teach the classes. So are you cool with the first thing? This is the first step anytime is just gauging the trend of the market. Is it going up or down? Most people get that pretty quick. Here's the second thing that I do. Do I have strong triggers? And what does that mean? That means small below the large, space between the two. And I'm going to put a space in this. And this is my thought process. So the first one, there's the trend. The second one, there's my momentum. I like it when you guys have me break it down like this. I really do. Because when I break it down like this, come on now. Oops. When I have to do this, why is it not? All right, I'm just going to do a new call out box. So there's my first two. And since it's just the large chart, we'll do it just on the large chart. Guys, I'm struggling here. So there's number one, the trend. There's number two, the triggers. Then the third thing that I ask myself. So I'll just put a 3 and we'll do it over here. Are there termination conditions? What does that mean? That means that price reached an area, no triggers through the area. That's a technical termination condition, David. So when I'm doing that, let me type this in. I'm using most current bar and looking at, in this one, the lowest point of the bar. Meaning that this is where I'm looking to see if I've reached an area. Does that make sense? And remember, you're going to have to take a little time and piece this all together. But this is my exact thought process coming into the trade. Just one, two, three. I'm going through these three things because it covers my first rules every time. What direction is it going? Do I have strong triggers? Have I reached an area? Let me put have I and not abbreviate that. Have I reached an area? We'll do, I guess, I price. Reached an area. No triggers through in the area. So David, does that, so far so good? This is your large chart read. Let me put this on here. This is your large chart read. This is what will tell you to look for an entry. This is where I lose. So termination conditions are where I lose you. Perfect. Not perfect that you're lost, but perfect because now we know exactly what you need, right? So let's see if visually we can get a couple different things in place for you. And guys, this is what the class is for. The class isn't to hurry through anything. The class is 100% designed to make sure that everybody's comfortable before we get there. So I'm going to go to the simple picture first, David. This is my process for looking for termination conditions. And when a termination condition is reached, it's going to look like this. Those price bars are going to run into an area. So this is what it looks like. Price reaches an area. So far, so good? That's the first part of the equation. And then once price reaches an area, let's go to termination conditions at a high so that it looks, or at lows. The recipe is price reaches the area. Those price bars get down to whether it's fibs, yellow 1-to-1s, a divergence low, but the price bars have to get to it. They have to make contact. That's the first thing, price reaches an area. So if we're going down and it's at a low, if all the triggers remain above, see how your trigger lines stay above that area? The smalls don't break through, the large don't break through. Price got there, but the triggers didn't. That's a textbook termination condition. And you'll see it at 1-to-1s. You'll see it at fibs. The price bars come down, and when they reach the area, all you have to do is ask yourself, where are my trigger lines? And if they remain above support, don't go short. Rule number 2 is not met. Same thing over here. There's one of those losses of momentum, but it's not a termination. And then the recipe never changes. If price reaches that line and the triggers remain above, well, then you have no more trades to the downside because you don't have a clear path. And then the same is true at highs. The same is true. Whoops. Let me find my high picture. That's lows. Termination conditions at highs it's the exact same recipe. Here's a pivot that loses momentum. That's not a termination condition because for it to be a termination condition, price reaches the area. So let me do this one. Are you comfortable with what it looks like when price reaches the area? Let's break it down even more. And this is for everybody, not just David. David just had the courage to say he needed a little help. These dynamic Renko bars come up and reach the magenta line. That's the first part of the process. Guys, everybody give me a Y in the room if you're with me. If those dynamic Renko bars hit that pink line, hit that red line, hit those yellow 1-to-1s, that's the first piece of the equation. And then you just ask yourself, well, yeah, we could do it. I don't know. It may. Where are the triggers? If they remain below the high, that line at the high, it's a termination. So let's go see, David. And guys, I will always change directions and change what's happening in the classroom to make sure that you're comfortable. And sometimes it does help to see it on a live chart. David, do you see how the price hit that red line? Do you see how all of your triggers are below? Textbook termination condition, David. What this tells me is sit on my hands and wait. That's all it is. Just sit on my hands and wait. Does that make sense? That's a perfect example live. And then you'll notice down here behind it, look what got us pushed all the way up to that area. Price pulled back to Fibonacci support. All the trigger lines remained above. Let's go through the process. Price is pulling down, and it hits Fibonacci support. Where are the triggers? If they're all above Fibonacci support, no short trades, no matter what your opinion is. And then it hits the second one, and the triggers are all above. There's no short trades to be had, but it's too soon for long trades. And look how support holds. And it goes all the way up. Whoops. Let's go through the whole process. We had a fib update at 10 a.m. Small triggers are through, large triggers are not. It has the potential to break. Smalls and large triggers are through. The area is broken. It behaves as support. And then we're just watching it. We can see this red line in the distance. We know that price is likely to go there because of the momentum. If you found an opportunity right here, this becomes a target. And look how it hit it right to the tip. Does that help a little bit, David? Show me a picture, Snorri. Awesome. And guys, I'm telling you, I say the same thing 1,000 times a day. But the reality is that we're all going to catch it at a different time, and we're all going to see it differently. That's the beauty of it. So, David, let's go back to that potential entry. Just with that lesson in mind, and I'm taking everything off of here because I don't want to be bothered with termination conditions. But now that you know the recipe, and it'll look like this. So let's go through the process. Snorri, did you do all of your reload, all of your database clean out, temporary folders, stuff like that? Cream, you asked about when they're pinching. They pinch when they're rolling or when there's no momentum, when they're flat. So yeah, that's it. Is that what you meant by pinching when they look like this? What does it mean? Okay, yeah. You're just going to see it at different times. And then Snorri, you didn't have a fib there, and you are running synthetics. So Snorri, do me a favor, right click, go data series. How many days back are you running? And remember, I'm looking at NinjaTrader 7. And it shouldn't make too much of a difference. And we are in the same time frame. And you're on November. I'm going through all the different things. You're 11 days back. I'm 10 days back, which means that we're going to have different pivots. Because your market's taking a whole day's worth of calculations beyond mine. Change it to 10 and see if it goes, and see if we line up, if you would. Yeah, but that's it, guys. That's just an easy way to check. So guys, let's get to our entry. The trend is down. The momentum is down. And then David, there's no lines here, right? There's nothing in the way, so the path is clear. And then David, if that was Fibonacci support, guys, if this was Fibonacci support, blue line, would we have a clear path? Help me out with this. David, what do you think? If that were Fibonacci support, price had reached it and the triggers hadn't broken, do we have a clear path? Are we still looking for an entry? No, the answer is no, because price reached the area. None of the triggers have broken. This is a termination condition. The only thing to do right here is nothing. Price, these dynamic Renko bars, reach the blue fib. When they reach the blue fib, none of the triggers have broken. This is your textbook termination condition. But since we don't have a blue fib there, price didn't reach an area. It didn't hit anything, right? So David, if you throw a tennis ball at a wall, price hasn't, or the tennis ball hasn't reached the wall until it hits the wall, right? That wall is your termination condition. That tennis ball is price. And if it's a brick wall, it's probably going to bounce back at you. And if it's a paper wall and you throw the ball hard enough, it's going to break. Oh yeah, then move it back. It can't give you the wrong fibs, Snorri. It can only give you your fibs, if that makes sense. 10 is ideal. Trade your charts. And I'm going to tell you right now, guys, everybody adjusts their charts different ways. Everybody is going to do, some people do 3 days, some people do 10 days, some people do 30 days. And the key is to trade your charts, to be consistent on your charts. I change my charts a lot. You can see I took off all the indicators. I'm going to put them back on. I might change days. I might not remember to clean out 7. But the lessons are always the same, right? The lessons are always momentum, terminations, and clear. David, does that help? If there's absolutely nothing there, you know that it's clear. But if it reached something, you know that there's a problem. Does that help? Awesome. And remember, David, we're going to do this every day, man. So just because it's not clear today doesn't mean that it won't be clear tomorrow. So guys, rules 1 and 2 are met on the large chart. Here's a look at your small chart. Everything says down. And when everything says down, we're going to wait for a reversal bar. And when we get a reversal bar, we're going to do a little bit of drawing, either in our minds or with the tools. First, we're going to circle the triggers from the top to the bottom. And guys, the tighter these are on one another, the smaller your window of opportunity is. But then we're going to look for the areas that fall inside, and it's nothing more than a mid-band. This is where the market is likely to bounce. So trend, momentum, clear path, and then go to your smaller, faster chart. Reversal bar, triggers, areas inside, and there's only one. Guys, this is the area most likely to create a bounce. And this is your high probability trend trade. This is the trade that typically wins 70 to 80% of the time. This is the trade that's chock full of advantages. This is the trade that should set the tone for your trading every time. That those advantages are present, that you're embracing the 2-chart process. And guys, I've got a way to make it easier for you. And then David, I want you to do this just as you go through learning the termination conditions. Just open up a large chart, and this is all I want you to look for. I want you to look for how many times the price bars hit an area and didn't get to the other side. Maybe it created a bounce. Maybe it reversed the market. Maybe it created a stutter. And this is what I had to do because, David, when I started day trading, when I started learning the software, termination conditions escaped me. And I'm not going to lie, I traded into them all the time. And this is what helped me a lot, is I didn't worry about trades, I didn't worry about entries, I didn't worry about anything. Well, there's a lot of noise because right now you're trying to take 10 things and make sense of them all at the same time, right? But what if, David, this is the most current bar on crude oil. I know that it's the most current bar. What if all you had to look at on the large chart, David? And that's kind of hard to see, so I'll make a couple. What direction is the trend? It's down. Are the small triggers below the large triggers? Are the large triggers getting wide and angled down? Absolutely, right? Did we reach an area? At the bottom of the, look at the bottom of the bar. Did we reach Fibonacci support, one-to-ones? Anything? No. My small triggers are through the area, but my large are not, which means that this area has the potential to break with all that momentum. So all I'm looking for right now, David, is a reversal bar. I have momentum. Everything says down. The market is screaming. I haven't reached an area yet. This blue line way down here, man, that's a target. That's not a termination. So I'm looking at my triggers. That's my area inside a favorable large triggers at 91.78, even before the reversal bar. Does that make it easier without all the noise, without looking at everything in the rearview mirror? Because it's a lot to take in. And I think that we get so caught up on what happened that we forget about looking at where we're at. So there's my reversal bar. From the lowest point of the triggers to the highest point of the triggers. Highest point of resistance, lowest point of resistance inside. There's my order. But the thing to remember on this particular trade, with the which bars? This bar right here? Cool, no worries. So let's go through the only thing that you need to know. If they're green, they're up bars. So the same look as the background is the same look of the bars. If you have a green bar, you have an up bar. If you have a red bar, you have a down bar. And then this is the only time where it changes, right? Is if you have nothing but red bars. Okay, not the candles, but the lines. Dun, dun, dun. Did you watch all the videos introducing you to the software? There's a pretty good run of that. But check this out. I give this every morning, David. There's your definitions on what's what. So commit these to memory, what they look like. That's everything you need to know on your chart. Everything you need to know right there. Pretty cool, right? I'm telling you, David, I'm a dreamer. I'm an English lit major. I am so into not being techie, which is why simple, simple, simple. Yeah, it's hard to follow, David, because you're brand new, right? Because you're taking in all this information and it's not second nature to you. So don't be in a hurry to be great. You identified trend with no problem, right? That's the first step. And then you identified momentum and you were great at it. That's the second step. And this is where you're going to spend a little more time, David. You're going to spend a little more time on termination conditions. So you're going to commit yourself to spending a little more time on termination conditions, and that's totally cool. And I'm going to give you this video watch list. No, you didn't hijack the class. This is your class. And David, when you ask a question, this is your private session. Everyone else is getting something out of it, trust me. This first video right here, I want you to watch this evening. This is my brother being probably the smartest that he's ever been, talking about tops and bottoms. So will you watch this one for me tonight? Awesome. And you'll be amazed at how that clears it up, or at least get you on the right path. And then once those termination conditions become kind of second nature, well, then start focusing on the entries. And that video helps a lot. What market, Dano? 91.77? You don't have a fib? Same questions. How many days back? What time frame are you in? Right? Are you 10 days back? Okay. Are you in Eastern time frame? Did you clear out your cash and tick this morning? Look at you anticipating. Are you running synthetics on NinjaTrader 8? Remember that I'm on 7, but so when I have something like that, when John Novak and I in the morning don't line up, the first thing I do, if all of those are yeses, the first thing that I do, Dano, is I disconnect. I disconnect from data for just a second. And where is it? And I do the repair and reset. And this is the first thing that I do. So if John Novak and I are looking at different fibs, there may be a tick or two in there that's corrupted. Something's gone wrong. And I'll do a reset and a repair on my database. And like 9 out of 10 times, that gets us back in line. Um, and then I'll tell you what I told Snorri. Always trade your charts for sure. But here I have a 5-1 fib, and it's a 21 range fib. I don't have a native 13.2 fib at 77. And these just updated at 10 o'clock. But you could try the reset and the repair and see if that helps. And then guys, now we have a termination that creates a full reversal. I do have odds favorable momentum. Okay. Run through the reset and repair and see if that helps. And if it doesn't, always go with Jason. That's about the extent of my tech. D-Rock, what do your rules say? You know you can do anything you want, right? One of these fibs is on the 5-1 chart. You can do whatever you want. So D-Rock, if all of the trigger lines are below these fibs and price pulls back to them and all the triggers are below, isn't it an area likely to stop the market? And if it's an area likely to stop the market and you have odds favorable momentum and you have a termination condition, in this case it happens to line up with the 5-1, right? It creates a perfect opportunity, potential opportunity. But let's say this fib wasn't there. Would you choose the 13.2 fib over resistance inside of favorable large triggers? And D-Rock, what you'll find is situations like this. Let's say that there's nothing inside of favorable large triggers here, right? So rule number 3 isn't met. You may make the choice that says, since I don't have areas inside of favorable large triggers, maybe they're all above it or something like that, you may make the choice to say, I'll look for an opportunity. But for me, I've got odds favorable. I've got no termination conditions. I got a reversal bar. And now I have an area of resistance inside of favorable large triggers. And guys, this is my window of opportunity. So I'm taking the information from the large chart and I'm refining it on a smaller, faster chart. But there will be situations, D-Rock, where you may consider that. This wouldn't be one of them. Does that make sense? So how do we do, guys? First hour, we're talking about advantages. That's all we're doing. The second half of class is going to be me clicking on the charts that you present. And we're going to talk about the advantages that I see. We're going to talk about the disadvantages that I see. We're going to talk about what you're doing. And in order for me to give you the absolute best feedback, I want you to commit to this recipe for chart annotation, guys. I want you to give me the large and the small chart because they work together to create a trade. And I'm going to tell you right now, I don't care if it's a high probability trend trade, if it's an HVA trade, an edge trade, I don't care if it's a momentum trade. I want to see your rules. I want to know why you did what you did. Because the idea of this class is that you tell me why you did what you did, and we go back to those three advantages. Okay, this is why you did it. You got run over. Let's look at it. Did you trade into a termination? Did you fight momentum? Did you break the trend, right? And by you telling me what you saw, we can identify any challenges and kind of work together to get through them. And it also solidifies the looks with the words, right? The looks on the trades with the words that are on it. Show me your timestamps. Show me your price so that I can line up your entries. And then, guys, if you haven't already done this, do me a favor. Right click on your entry chart and plot executions. Go to data series, scroll all the way down. And if you go all the way down to the very bottom, it's going to show you plot executions. And if you're plotting executions, it's going to show you where you enter, and it's going to show you the price that you entered. And what you're going to do is you're going to be able to see exactly if you're getting it at the right spot, if it's early, if it's late, um, and it's going to help considerably to get you where you need to be. So do me a favor and annotate charts, right? Be solid on that chart annotation, and it's going to help me out a lot to help you. I'm going to put my crude oil back together. And I want you to remember that Rome wasn't built in a day. You're not going to be great in a day. The idea is to go through, identify each individually so that you can string them together to take a trade, guys. And I'm going to give you some gifts right now. Whoops. And the first is going to be the high probability trend trade checklist. Here's those same rules that we talked about all morning long, creating a foundation, giving you something to print out and put on your desktop so that you can police yourself. Am I following the rules? Am I getting those advantages each and every time I take a trade? And then for you guys that need a little help, like I did, here they are visually. I'm a visual learner. If I see it, I have a better chance than just hearing it. So here's a termination that creates a reversal, which is a good top or bottom. And I can still take a trade without it. I just have to manage it a little differently. And then there's that video, and this is the same one that I posted in the room earlier. It's on your checklist for those tops and bottoms. Defining odds favorable momentum, and then also defining when it's not present visually. The idea for termination conditions, and again, guys, remember, it's going to take practice and repetition. And then defining your window of opportunity for shorts and longs here. I've gone through and done that. So there's your one to print out, one to keep on your computer. And then finally, one of the traders that I respect tremendously told me one day, he said, if you don't have a written plan, you don't have a plan. And guys, this is where rubber meets the road, if you will. By writing out a plan, by defining your rules for entry, you can be consistent. Your plan doesn't guarantee winners, but your plan provides the statistical advantage. It says, this is a pattern that I've studied, and I've looked at 100 of these trades, and I won 70% of them. I won 80% of them. I won 65% of them. This is a pattern that wins more than it loses. So this pattern has worked its way into my trading plan because that's the goal, is to win more than it loses. If your first 20 days focused on entries, guys, you have a solid plan. This is a stepping stone in your learning journey. It's designed to optimize your chances of success with a high probability trend trade. And then I've also added in a 50-50 trade, that area's likely with the potential to break trade. But it's simulation, study, class feedback, and continuous practice. You're going to make a plan that's tailored to your personal goals based on your experience reading the indicators. And you see this a lot. D-Rock asked about using the fibs on the 13-2 chart for an entry. And he did that because he's recognizing patterns and he's beginning to see things present themselves that may create an advantage that are outside of the very basic rule. So this plan isn't designed to be the end of the road for you. This is the beginning of the road. And it's a plan for consistency and it's designed to keep you focused. And guys, it starts with never fighting the large chart trend or triggers, never fighting the trend, never fighting momentum. This keeps new users out of approximately 50 to 60% of the typical losing trades that new users take. Remember, this plan is designed to keep you safe. It's designed. Um, so David, this page I've dropped them in the room. You can download them. This is on my computer. I just throw them in the room every day. You can either click the arrow, it'll download it onto your computer. Let me show you. This arrow will download it onto your computer, or you can literally click on it and drag it down to your desktop so that you have them. The spreadsheet was provided when you downloaded your software. It's in the Nexgen study picks. But David, here's mine. Just take mine. It has all the same stuff. It has a place to track. It has a place for your favorite looks. And then it also has tons of examples of client trades for you to go through and look at. So the Nexgen one is the first 2 pages. Guys, this is me giving you all the trades that I stole from you guys in class so you can see what's going on with the software and start looking at them and annotate other people's charts by the rules. Play policeman. So we're going to define entries, guys. 20 days defining entries. 20 days not worrying about winning or losing. 20 days not worrying about anything other than getting in the market at the correct spot because great entries create manageable trades. And then here's the second half of it. And guys, this management plan isn't only on the spreadsheet. It's also right here. These links work when you have it. Allowing your management to be just as mechanical and methodical as your entries, right? If this happens, then I take an entry. You have to have that same approach for management. Otherwise, you're subject to those emotions, anxieties, fears, right? The fear of missing out, the fear of it going without you, all those different things. So this mechanical plan is based on entries. It's based on getting in at the right spot. It's based on taking a trade from the area inside of favorable large triggers. And when you take this trade, your stop is where the market shouldn't go. Your stop is beyond that window. And at this point, there's nothing to do, guys. You're either going to get stopped out. That's a normal part of trading. It's a normal part of a positive equity curve. Or you're going to get that reversal bar in the direction of the trade. And when you get the reversal bar in the direction of the trade, guys, you're going to minimize your risk. That's all you're going to minimize the risk. And when you minimize the risk, you're either going to get stopped out or it's going to go to your first target. And your first target's only $100. And I'm going to tell you guys right now, it feels good to make $100. It creates confidence through the memory of success. It brings elation, dopamine, serotonin, all the wonderful things that make those palms stop sweating. And when you reach that $100 profit target, you're going to move your stop to break even. You're going to have nothing to lose and money in the bank. And guys, the idea isn't that you're never going to get stopped out break even. And the idea isn't that $100 is always the best first target. But as a brand new user, when you hit $100, when it goes in the bank, when you go break even, you're more apt to let the large chart lead the way. You're more apt to let that momentum and clear path get you to the next target. And the next target is $200, guys. There's nothing to do here. You're going to get stopped out break even a lot. Or it's going to go to the next target. And if it goes to the next target, it's a $300 trade. You're out. You're done. Doesn't matter what happens next. And guys, $300 a day is $72,000 a year. The small chart is like heroin. It's easy to get caught up on the small chart, isn't it, David? It's easy to focus on what the small chart is saying and forget that the large chart leads the way. And guys, that's one of the things that you're going to have to overcome. But that's where the spreadsheet comes in so easy, because what happens is you start seeing all of these advantages and these great entries. Guys, excuse me just 1 second, please. All right, part of my trading plan says always kiss the wife. But all of these great entries, every great entry that you guys take creates an opportunity to learn how to manage it better. Every great entry that you take creates an opportunity to get more out of it, to do more and more. And what happens over the course of time, David, is, and I hate that this is a part of the learning process, but it really is you're going to trade that small chart rather than the large chart. And you're going to find yourself losing a lot of trades. And when it happens, that repetition, that little kick in the shin, is going to create an opportunity for you to get better and better every day. So, large chart leads the way. Manage it methodically, manage it pragmatically. Don't let emotion step in the way. Keep it if then, guys. And that's your simple plan to success as a brand new user, your simple plan to consistency. And that's going to get you where you're looking for, right? And that's the goal. If you focus on the large chart, the noise you talked about before will be so much less. Absolutely, Snorri. I agree 100%. Because the new brain tries to make sense of everything, right? The new brain, guys, I always go back to this one. And this is how we're going to go right before the break. Has anybody seen The Last Samurai with Tom Cruise? Great movie, guys. Do you remember the part where he's getting his butt kicked by this dude? And this guy runs over and he's like, dude, Tom, too many mind. You're minding the sword, the people watching, the enemy. There's too many minds. Focus on what you got to get done. It's the same thing. If you ever played baseball, when you're standing at home plate and you're ready to take on that pitcher, guys, you're not focusing on the left fielder. You're not focusing on the people in the stands. You don't even know the catcher's there. The only thing you're focused on is what's important, that baseball coming at you at 85 miles an hour. And trading is very much the same thing. Once you know what you need to do to be successful, it becomes easier to focus on those things. So let it be simple. That's why I embrace simplicity. And then, guys, termination creates a full reversal. Full reversal creates odds favorable momentum. Odds favorable momentum, how to clear path. Here's your entry inside of favorable large triggers. Every one of you, I hope, got your butt kicked on it. And then Paul just gave the most important word in day trading. Next. Next. This is why you have to annotate your charts, guys. This is why you have to go through the process every trade of using that checklist. Because I want you to see something. Especially you people that took it and you're wondering what the hell went wrong. Let's go through the checklist together. And then I'm going to take a break because I am super hydrated. Did we have a termination condition that creates a full reversal? Did we come from a fib that no triggers went through and it reversed the market, guys? That's a yes, right? Did we have odds favorable momentum? Yes. Did we have no termination conditions? Yes. Did we have an area inside of favorable large triggers? Yes. How long is it going to take you to be comfortable with the idea that anything that wins 70 to 80% of the time has to lose 20 to 30? Guys, if you post this trade in the room and you wrote your rules on it, you know that it's a cost of doing business. If you took this trade and you didn't bother to annotate your charts, if you didn't bother to write the rules on it, you're wondering why you suck at trading, right? I know that's what I did. Oh my gosh, what did I miss? What did I miss? Didn't miss a darn thing, guys. It's just the cost of doing business. This is an outstanding trade. I would take this trade 1,000 out of 1,000 times. And I know that if I take 100 of them, I'm going to lose 20 to 30 of them. And it's a cost of doing business. That's all it is. So I'm going to leave you guys with crude oil. The trend is up, the triggers are up, but we're right into termination conditions. Let's see what happens, guys. I'm going to take 5 minutes when I come back. We're going to look at your charts. We're going to relate each and every one of them to advantages. I think that was a pretty outstanding first half of class. We're going to finish strong. Back in just a few, guys. All right, guys, I like you too much to stay away too long. I'm going to start at the very top. When I go through your charts, guys, I scroll to the very top of the chart box. And you guys are all the way down at the bottom. So I'm going to go through three or four, and then if you had a question, we're going to come back through and look at it. Joel got us going today, and everything is a choice. Everything is a choice. Rules not met, he traded into a termination condition. Guys, this isn't necessarily a negative when you're in the learning process. Breaking your rules is a part of it, especially when breaking your rules results in the most likely outcome. What you're doing is you're saying, I thought I saw something. The entry's perfect, but that termination condition, rule number 2, not being met, killed the trade. And it's awesome because now you're reaffirming that rule number 2 is so important. The area has the potential to break, but it hasn't broken yet. Divergence prints on a 50-50, guys, on those areas likely to break. If you go to the simple plan, it says don't take the trade, especially if it's not coming from a termination condition. So once again, rules get broken. Rules get broken, and it reminds you that this is not your trade. This doesn't have to be your trade. Your rules weren't met, and relax, I knew I wouldn't win. What a negative poor me mentality. Sorry. You never know. Guys, accept the fact that you never know what's going to happen. The only thing you know is whether or not your rules are met. Because the market may give you a winner. You don't know anything. Accept that right now. All you know is whether or not your patterns create a statistical advantage, guys. And the journey's getting to where you are. Either rules met or rules not met. That's the goal. The goal is either rules are met or rules are not met. And you need to mess everything up along the way so that you can get consistent in trusting your rules. That's when it simplifies. That's it. But annotation is key. You don't have a clear path, but you said that you did, right? So I hold you guys accountable to your annotation as well. And that's part of what I do is if you annotate a chart that says that the path is clear, then I'm obligated to remind you that when both the small and the large aren't through an area, the path isn't clear. And Joel, that was a little bit of the challenge. Not coming from a good top, divergence prints. And if you go back to that simple plan designed to keep you safe, we had two. We had two no's on this simple four-part checklist. So make all the mistakes, guys. And the fact that you recognize your mistakes is a growth process. The fact that you recognize that you're going outside of those advantages means that you understand the advantages. And I'm all about celebrating victories. And guys, we got to just look at this one real quick. Good stuff. All right, Ron. Ron says that when I have odds favorable momentum, when the path is clear, Ron takes a trade on his trading journey through feedback and chart reading. He takes a trade that takes advantage of momentum, and it's not a home run. It's a little chunk. The large chart says it. The small chart gets him in and out. Nice trade, Ron. Consistent. Guys, if I look at 100 of Ron's trades, 98 of them look exactly the same. Sydney, everything says up. You let it clear the areas. I love this chart, Sydney. It makes me so happy. The entry comes in. And then the only challenge on this one, I have all the information that I need here. Show me that entry chart, right? Because right now we're looking at somewhere over here when your trade happened here, and I love it. It's momentum style. Everything is up, everything breaks. You take your entry above the areas, and you get out at the trouble areas. Sydney getting better and better on those chart annotations. Thank you. And then Ron, once again, clear path. It looks just like yours, Sydney. Clear path, everything says up. Make a little money, get the hell out of the market, and wait for the next opportunity. Great job, Ron. Jose, everything says down. No divergence on the pullback. Beautiful management, perfect entry. Solid, Jose. And then one more trend trade with odds favorable momentum. Pulls back to the area inside of favorable large triggers. Whew, love it. And then Jose holding just a little longer than you needed to, right? Just a little longer than you needed to. That's about the only thing I can say about this one. Alan, right click on your 34 chart and just plot executions. And then if you want to be able to watch them go at the same time, Alan, make sure that your accounts are the same accounts. and make sure that your strategies are in. So if your chart trader lines up on both, it'll show everything happening on both charts. And D-Rock, Rons are not trend trades. They are trading with the trend, but they are not trend trades. They are jumping in and jumping out. And it's something that Ron developed through hours and months of study that creates a statistical advantage that he's really, really good at. Um, and he's found a way to take his chart reading and turn it into a plan that suits his needs, which is pretty awesome. That's the goal every time. Guys, I told someone the other day, my goal is that you fire me. My ultimate goal is that you guys say, you know what, Mark, I don't need you anymore. I'll come in and say hi, but I'm so comfortable in my plan and the looks that I'm there. Your feelings were that were a termination condition. I love it. GWC, your feelings mean nothing to the market. You know that, right? I'm hired. I want to be fired. Okay, I like laid off. I do too, to be honest with you. GWC, can I share my feelings? And guys, here's the coolest part is you and I, we can all disagree all the time. We can disagree. Oh, guys, you guys. I actually prefer it when we disagree every now and then because I'm not going to lie. When you and I disagree, it means that I have to defend my stance. I have to defend my teaching. And I have to learn to say it someplace differently or some way differently. So check this out. For me, GWC, if my trigger lines get above, it might be overrun, and I'm never sure in the moment. And this is where I'll use a smaller chart to kind of help me define. Um, and GWC, I hope you're listening. And guys, this is for everybody. Um, if my trigger lines start getting through an area, it can be a little bit of overrun and it can still be a pretty good top. But I'm looking for confirmation. Do you guys remember that three divergences on the smaller, faster chart? That's going to help me confirm overrun. Does that make sense, everybody? It is a termination condition, without a doubt, because the triggers didn't go through, but it's not a strong top. Weak triggers out of fib, nothing breaks through, definitely a termination, which is why he's looking for the short after the termination. I like it, and I'm trying to see where you got in. 91.90. So you got in on this pullback right here. It's the 50-50, no divergence, perfect entry, and you're out at the trouble spot. GWC, it's perfect. Guys, when this is overrun, a lot of times this will confirm it on the chart over here with those three divergences. I guess that's where I was going with that. But your feelings are right. The termination condition was absolutely a termination condition. And the termination created a full reversal. And the full reversal gave you odds favorable momentum and a pullback to resistance inside of favorable large triggers. And great googly moogly, the pattern repeats itself again. D-Rock. Same trade, same entry. Absolutely beautiful. Look at that. Holding for the bigger moves, D-Rock. Great job, gentlemen. Both of you took the exact same trade. Alex G took the exact same trade. Telling you, I get so stinking happy when I see my people coming in and doing the exact same thing. Why? Because the rules are met. It's not even a weak top. It's just not a strong top. So, um, Dwight, it's a termination. The triggers don't get through, right? Price reaches it, weak triggers, add a fib. It's a term. They try to get through, but they can't. It's just a termination. I'm not going to call it a strong top because the triggers did get through a little bit. And guys, terminations are great. Strong tops are just a little bit more greater, or you know. That's an awesome look. And this look sets up this trade. It's beautiful, guys. Beautiful trading. And Alex, it's nice to see you hop in here and throw down a little high probability trend trade for the class. Nice job. Let me see where we're at. Did I see this one, GWC? Triggers below the fib, but all the charts say up. So same thing. A little bit of overrun, right? And it's not that the triggers are all below. GWC, do you see how the small and large don't get through? They tried to. But does everybody see how the small and large did not get through this area? It's not going to let me get it. And guys, give me a Y if you see this. This happens, right? The small didn't break, the large didn't break. That's textbook termination. And then it creates a full reversal. I love it. I love it. I love it. The best look, of course, always is none of the triggers go through. But guys, none of them got through here. Neither the small or the large didn't make it through that area. That is textbook termination. Let me see where I'm at. I think I got a little messed up. Jose, GWC, D-Rock, Alex, we saw coming through. Snorri. Strong top, not a strong top, but with divergence. I like it. Strong trigger, separating, no termination, clear path. Pull back to resistance. First target hit. And then manual exit, afraid that the one-to-ones would reverse the market. And I think that you had a great realization here, Snorri. These one-to-ones on a small chart, let's look at what happened when they hit them. I still have strong triggers. I still have odds favorable momentum and a clear path. That midband, if anything, is just an entry for another trend trade, isn't it? And let me know if that makes sense, Snorri. This midband is another entry, and you let the small chart talk you out of what the large chart was saying. And guys, that's normal. I say that's normal a lot because we all want to believe that when we make a mistake, we're the only person making a mistake. You're not. So Snorri, this is where the large chart leads the way, right? And when the large chart leads the way, we're less likely to let the small chart talk us out of trades. The same way, when the large chart leads the way, we're less likely to let the small chart talk us into trades. And yeah, the entry was effortless. You nailed it. Beautiful entry. You had what? 4 ticks of risk once it started going? Beautiful trade, Snorri. And remind me, you've been with us 3 weeks? Snorri's been with us 3 weeks. D-Rock has been with us 2 weeks. And guys, I'm telling you right now, I want you to remember that these guys are new. So if you're day one and you're feeling a little overwhelmed, these guys are less than 2 weeks into it, less than a month into it, and they're absolutely nailing the highest probability trend trades already. And newer users, would it be safe to say that you're doing it because you're not worried about all the other nonsense on the charts? You're just looking for the best of the best? Whoop, and I saw that one, GWC. Telling you, the less noise you take out of the equation, guys, the easier it becomes. Let's see. What kind of trade is this, PFI? I like it. Termination into the midband. Large triggers are a full bar away, so I like your area. But what made you get into the market right here? With flat large triggers, smalls down against you. No area inside of those triggers, right? Let me make sure that I'm not missing something. And guys, I'm going to tell you, I'm going to be a royal pain in your ass sometimes. Good top or bottom. Well, you had a termination that reversed it. Odds favorable momentum. PFI, here's the lesson that I really want you to get. And guys, this is what I want everyone to get. And Dwight, this goes back to those pinch triggers, right? Chef, I don't even know what any of those are. I do. I know what they are, but do you see how flat they are here, Dwight? Momentum comes from strong, and I think this is a great lesson. And PFI, thank you for the picture. Guys, when they're flat like this, there's nothing. There's no support from those large triggers. You can't have odds favorable, especially if your small triggers are down against it and these are flat. And this is a typical reaction because your immediate momentum is pushing down and there's nothing really to fight against it. PFI, you had the right idea. The area held, it comes back, it retests it. But in that moment, you're not trading from the area. You're trading from above the areas. They're not inside of favorable large triggers. And you don't have a clear path because your mid-band just held with the large triggers a full bar away. And guys, this is textbook termination. Absolutely. When they're super flat, so look at them here. If they're flat here, these are the synthetics. Do you see how lifeless they are? They've been horizontal for 5 minutes. Same idea, absolutely. So we did have a good top or bottom. We don't have odds favorable momentum. The path isn't clear because when you reach a mid-band and the large triggers are a full bar away, it's technical. And PFI, this one got me a lot. Stop saying sorry. This one got me a lot in the beginning because it looks awesome, doesn't it? Right here. Looks rad. You're like, woohoo, let's go. And that gap theory, that idea that if the large triggers remain a full bar away when that midband is hit, here's a picture of it. The midband gets hit, large triggers are a full bar away. It's super likely to close that gap. And when it does, the immediate momentum is just cranking at that point, and that is a term. So I think that's the one that really builds a little patience, and then it comes back and it hits support, right? And you were able to do okay with it. You let it come back, you let it retest support, it gave you a higher divergence. You get to the right side of everything and you let your small triggers roll. And do you see how this one has such a better chance than this one? Just that little piece of patience. It's a great read, PFI. It really is. It's an awesome read. And then that's just the normal. When your read gets you jumping the gun just a little bit, because you're like, oh, I see it, I see it, I see it. And just that little, no, it's an awesome chart read, dude. It's a termination that reached the midband, right? So this termination, let's talk about that. This termination got you exactly where we expect it to get you, at the midband. And your large trigger said, just be cool. We're probably not going to smash it. And then this termination got you right to where we expect it, right back to support. Look at the difference in the triggers when support's retested. This tells me that, man, this is probably going to be a good bottom. And this is where the patience piece comes in. Just waiting to get to the right side of stuff creates the advantage. So nice. It's a great read, PFI. It really is. It's a solid read, and you just got a little case of the yips. You got in just a little too early, which I think is really normal. That was one of my biggest challenges. And then Ron says this is a cost of doing business. When everything says down, he got stopped out. His plan was met. His path was clear. He gets stopped out. So he gets back in when the rules are still met and makes his money. Guys, even somebody as consistent as Ron is going to take losers. It's a cost of doing business. The key is making sure that every time you get into the market, that advantage is in place. And then D-Rock, let's see what we can say about this one. So the exact same thing, D-Rock. You saw the gap theory after the fact, so you exited when you realized this. You also noticed the 13.2 had not broken above the yellow 1-to-1. This is growth, ladies and gentlemen, to make a mistake and then to go back and analyze it. There's your path to victory right there. D-Rock, this is awesome. Is it the wrong trade? Yeah, it's the wrong trade. But check it out. You went back and you analyzed it and you said, oh, it's likely to pull back and reach those large triggers because of the same thing we just talked about, right? You just got a little antsy. Nice save, dude. I love this picture. This picture makes me happy because it means that you do understand the advantages, because it means that you do understand the rules. And you're accepting the fact, dude, you're human. You're going to make mistakes. The key is to not let them break you down. The key is to learn from them, right? I make mistakes every day. Every day in trading, I make mistakes everywhere. Mistakes are how I grow. Mistakes will be how you grow. All right, Snorri, there's that same look, right? You didn't enter because the small triggers were inside of the large. Bothers you not to enter because they were strong and it was a good entry. I love that it bothers you, Snorri. So let's talk about it. Yeah, Chris, sometimes between like noon and 1 Eastern, 11 to 12, you'll see them slow down a little bit. They don't lose too much. They're still very tradable. But sometimes there will be a little slowdown. So Snorri, let's turn it into a chart read. And I like this one very much. And it goes back to the same conversations that we had with PFI, right? The termination did great. And it got you right to the midband. You stayed out of it because of the gap theory. And then it retests support. And look at the difference in the trigger lines, right? Support's likely to hold. And then when the triggers roll and everything starts to go up, right? Your smalls are above. That's a pretty good first shot at the bottom when everything agrees. And then here, this is really the acceleration process, Snorri. When the smalls are still inside, but do you see how they're vertical and up? And I want to talk about that look. And I'm going to tell you right now, guys, you're probably going to mess this up a few times. I did, but that's okay. So Snorri, look at the difference between the trigger lines turning from a bottom. They have to accelerate up through, right? They eventually have to work their way out. This is your best look. That's right as it's coming from. But what was key here is what was happening, what happened below you, right? So look at the difference though. When they're coming in and weakening, they're going from left to right. When they're accelerating and getting stronger, they're going from right to left. Going from left to right as they weaken, working their way really from right to left. You can see that they're starting to work their way out. Does that make sense? Snorri, you'll catch these eventually. It's not the best high probability trend trade look. But I'm going to tell you right now, your ability to read charts, you're going to start catching this trade. Because not only was it a good bottom, it did everything that it should have. You respected the gap theory. This retest right here with all the triggers up is going to have you looking for charts agreeing for a long trade. You may not be there yet, and you'll see it after the fact, right? But give yourself a little bit of grace, brother. You're 3 weeks in. You're 3 weeks in and reading charts like a champ. And guys, if you think you see something, take a picture, annotate it. Let's talk about it. And we'll talk about advantages and we'll talk about disadvantages and we'll talk about patterns. Alex, beautiful. My gosh, what else do I need to say other than beautiful? Alex, can I share a secret? Then you have to tell me yes. Can I tell a little bit? Unless it's a different Alex. A lot of times people come to me with challenges, guys, and they don't feel like they're making progress. You're always making progress. You always are making progress. You just don't always see it. And as soon as you start focusing on the best instead of everything, guys, that's when all of your hard work begins to pay dividends. When the only options you have are rules met or rules not, it becomes easy. All right. Termination, full reversal, odds favorable, 50-50. And you're in on the second divergence, right, Gene? Which means that you've already had two losses of momentum. I love it. Everything's up. It's a beautiful entry. The only thing I'm going to say about this is, Gene, why no entry here on the first 50-50? I'm going to tell you guys right now, the later in the move you get in, the less likely it is to continue. Things wear out a little bit, especially on these 50-50s. I love your entry. It's perfect. It's manageable. Hopefully you got paid on one at the trouble spot. That's a great spot to take profits. And you're not risking anything. So you're not hoping that the area breaks by leaving giant stops. You're saying that's a 50-50. I'm not willing to lose. I love profits at the first trouble spot, though. And I also like the best entry. Guys, give me a Y if you see. This was a rules-based entry with considerably more room to get there, right? And that's just developing trust. That's getting into where you don't miss the first one. I see people getting in on like the third and fourth divergences on 50-50 trades and wondering why it didn't work. Eventually, recognition gets you in on this one. It's still a great trade, Gene. Because it's a teaching room, guys, a lot of times I'm obligated to talk about everything and not just the greatness of your charts, but sometimes I have to talk about everything. I have to talk about the positives, I have to talk about the negatives, and I have to try to always relate it back to those advantages, to those lessons. So sometimes the feedback isn't even for you. Sometimes the feedback is from a classroom setting. Alex G. Um, Cream White, to trade a two lot, your quantity has to be two. So if my quantity is two, see how I have two? And then you have those two separate targets as well. Which means if one target gets hit, now I'm only down to one. And I only have one target up there. So you have to make sure that your quantity is set at two, and you want to make sure that your strategy is set for two targets as well. And I know that this is going to seem crazy, guys. Whoops. There's a whole section dedicated to it in the instructions. There you go. Hey, Alex. Not a 50-50. Alex, are you with me in here? Why is this not a 50-50? And did you put that in there after the fact? Because it didn't work and you thought, well, it must have been a 50-50? And you may not have. You've been reading charts for a while. Your small and your large are through, right? Well, I guess your large wasn't. There was one bar off on yours. So yeah, never mind. That was a 50-50 for you. At the time of entry, that large trigger hadn't cleared, right? So now you have two divergences on a 50-50. Yeah, I didn't have it. So you had two divergences on a 50-50, and the triggers are strong, I agree, but two divergences on a 50-50 can be a deal breaker for a lot of people. I think it's a great trade. I think it's a great entry. And I think on your chart, these two divergences still may not have kept me out coming from that good top. I think it's a great trade, Alex. And I think your chart read was spot on. Yeah, I agree, Alex. All right, trend trade reaching a termination, but a lot of momentum and all charts signaling the downtrend. So, guys, this is an example of when you'll take your rules and you will say, you know what, I'm going to fudge them because everything says down. And of course, the only challenge with this one, Jose, is that you don't. You hear me now? Sorry, guys, my internet died off. Hey, David, great questions today. Thank you for being here. Let's do it again tomorrow and get good at it. Okay, I'm back now. Sorry about that, guys. This is just, I don't know when you guys lost me, but Jose made the decision with odds favorable momentum to take a shot. He took it, he managed it beautifully, and then he let weak triggers at fibs get him out. And Jose, I think that's really putting on a clinic for how your ability to read charts can take you to the next level on trades, can get you into trades that you wouldn't normally take as a brand new user. And that's okay. Bobby T says, odds favorable, clear path. There's no way that I'm going to miss this trade. Absolutely beautiful, Bobby T. Textbook, solid. Debbie W says, the triggers are through. I still like the trade. I'll manage it appropriately because everything says we're likely to go to support. Debbie, beautiful, following your plan 100%. Paul, just got you, huh? That's that one that got everybody. That's that odds favorable, no terminations from a good top, and it just didn't work out. And that's going to happen. I love seeing that loser, not because I like losers, but because it means that all of you guys are following the rules. You are not fighting anything. Who asked that? Um, whose chart was this? Gene? Gene, odds favorable. No terminations. These small triggers have to turn against you to get back to the best area. Just didn't work, man. It was a great trade. Everything was in favor of that trade, and it was just a cost of doing business. It didn't work. Adam for all, posting pictures. I love it. Adam, are you with me in here? Snorri, you can't see my screen. Here, let me reboot it. All right, there's my reboot. Can you see it now? Yep, Adam, cool. I love it. You got both charts, you got timestamps, you got current price, right? This is 90% of what I'm looking for. So, Adam, the next thing that you need to do, and I love that you're on first day, man. Welcome to Nexgen. New users excite me. Did you see a trade in here anywhere, Adam? Did you see something that you thought might be an entry? And I just asked, towards the bottom, but the triggers weren't in your favor just yet. Cool. So the next step for you, Adam, and I know it's day one, and I'm not trying to put pressure on you, is I want you to take this same picture, right? the same way you did it with your capture software. And up top, there's a lot of tools for us. So let's say that you were thinking about a short trade right here. Or let's say that you took a short trade right here, right? You can kind of give me little circles on what you see, little squares. You can use arrows. But the most important thing, and this is for everybody, is this call out button is click and drag. If you go left click, whoops, left click and drag it down, it's going to create a text box. And the easiest way for us to get 100% on board with one another is for you to type out what you see, what you're thinking, where you think it. Because on this particular one, if you were saying you were looking for a trade down here, were you looking to go up or down, Adam? TechSmith Capture was put on your computer when you downloaded the software. What are you using? You might be using something different. You're looking for an uptrend to buy. Awesome. Snippet. Go to your search bar, Adam, and type in TechSmith. You should have it. This is super easy to use, and it allows you to do all the annotations. I know some people use Snippet. And then the second half of that is you're already good at taking pictures. Here's a little how-to use that TechSmith capture and use all of those great annotation things. And then here's a link to it just in case you can't find it and you just want to re-download it. It takes about 4 seconds to download. So Adam, what we're going to do as you progress in the class and you hang out and you talk, you're going to say, Mark, I was looking for a long trade. And then Adam, we're going to go back to those very basic advantages that we talked about in the beginning of class. And I'm going to ask you, I'm going to say, Adam, what direction is the market going? Do you remember the simple lesson on trend? If it's green, it's up. If it's red, it's down. So we already have one thing against the trade, right? We would be fighting the trend. What direction are your triggers going? Your triggers are angled down, right? So now we have two things against your long trade. All of my trigger lines are below the fib. So there's another thing against those long trades. All of my triggers are down. Another thing against those long trades. So what we'll do, Adam, is we'll revert back to um, just the basic rules. And if I'm not mistaken, what you're thinking is that there's a blue fib and the background is green. I should be looking for long trades. Does that sound about right? Because that's what I would have done as a brand new user. And then this is where I remind you, and I love that you posted this picture. This is where I say until my lungs are empty. Large chart leads the way. It defines direction, momentum, and the areas. Small chart is only an entry chart. And on day one, you're just saying blue line go up, right? So what we're going to do is we're going to have conversations every day through the pictures that you present, through the conversations that we have, and we'll shift your focus from taking a trade that typically gets run over into maybe looking for an opportunity to continue with the trend. Does that make sense? And I can't stress it enough, there are no wrong trades, guys. There are no wrong trades. So check it out, Adam. Here's that same look where Debbie goes short and makes money all the way down to the Fibonacci area. And she's just been with us a little bit longer. So the fact that you're already comfortable taking a picture and dropping it in the room, man, you are light years ahead of the people that are too shy to do it. So let's do it every day and get where you want to be. D-Rock, everything says down. We saw this one, right? Everything says down. The path was clear. I'm going to read your annotations. Clear path, but momentum changed quickly as soon as you entered the trade. Did it? It really didn't, D-Rock. Those smalls are light years below the large. Everything is strong on every chart. You got the area. The original stop was 78, where the market shouldn't go. It didn't hit your stop. You say the momentum changed quickly. With the green on the small and the small triggers on the 13.2 turning green, you didn't feel comfortable, so you exited early. Right on. Likely exit was wrong decision instead of waiting for the hit to stop, but you didn't feel comfortable staying in the trade. So D-Rock, what you did there is you pretty much read your charts. But let's talk about the advantages. Where you got in is perfect, right? And you already had two divergences, but you got in at the right spot. Your stop kept you safe, which is cool. It was a big stop, but it's beyond the fib, right? Same thing we talked about earlier. And then the market comes down, and at this point, everything's doing exactly what you want the trade to do. This third divergence is the killer for me. The third divergence in the same price location, and your exit probably would have been the same. But you exited when everything had finally started going in the direction of the trade. You sat through the headaches. And then that third divergence becomes your management opportunity. Does that make sense? That's okay. I'll tell you what, it's always better to exit with panic than to hold with hope. Because the panic will go away. The hope is going to haunt you for the rest of your life. Because we all hope our trades win. It's human nature. It's what we do. So if it doesn't feel right, get out, right? Take your notes, annotate your chart, talk about what you saw, and grow from it. Great picture, D-Rock. And then Paul. You jumped in after a signal because you thought you would miss it. Should have waited for the area. Fair enough. I agree with that. With those weak triggers, it's probably going to make it to the area. And sure enough, it did. Um, and none of your areas are inside of favorable large triggers, so I see why you did what you did. Paul, can I ask a favor of you? Are you in here? And Alinsky, you are next, my friend. I know you feel like I'm ignoring you. I'm not. Paul, will you do me a favor? When you take your pictures, will you start here and give me that picture instead of the 17 hours going back? It'll just make it easier to read. Yeah, it'll make it a lot easier to read. Um, just because it won't come so small into the room. I know you're proud of what happened back here, but let's focus on the moment. Thanks, man. Hey, D-Rock, you make yourself a better trader every day. It's not me. All I'm doing is handing you a hammer and telling you how to swing it, man. You're putting the work in. So I'm excited. It's been fun watching you grow. And you're so early. You're going to be amazed at what you pull off as time progresses. You really are. All right, Alinsky, first post. First post ever. Let's see what it looks like. So Alinsky making the choice to trade the NASDAQ in your first ever run with Nexgen. I like it. That's bold. That's okay. What made you go short? Can we talk it out in the class? Why'd you go short? The two large charts. Everything was pointing down with odds favorable momentum, so you decided to go down? I like it. I agree with that 100%. What made you go long against so much momentum and trend? Was it this blue line? Hope. Okay. I just like that you recognize it. Awesome, dude. Nice. So the idea Just simplicity. You smoke the opium. I haven't heard that in so long. I love it. So, without getting too far into it, do you see how maybe getting in up here at those triggers might have been better than down here? But down here, everything's clear. The momentum's the strongest. It's cranking. Right now, Ron loves this trade. So keep taking pictures, man. Keep putting them in. Um, and I always suggest, I don't ever tell anybody how to trade because that's not my business. My business is to teach you how to read indicators. But I always suggest, especially for new users, start building that habit to never fight the large chart trend or momentum, and it's going to pull a lot of the stress out of your life. It really will. Really will. Thank you for posting, man. Don't lose that habit. Alinsky in 8 range is useless on NASDAQ. 100% useless. Especially if you don't know how to read it. 21 range is going to be a lot easier to discern information. And then you should have the workspace already. You should have NASDAQ workspaces already built in, given to you by John, and the 21 range is a part of it. But still, the range chart means nothing if your rules aren't met, and that's one of the biggest lessons I'd like new users to get. It wasn't included. So right click on your range chart. Right click on your range chart and go to data series. And you can change it to a 21 range. And you're going to have to put the template in or just build a new chart with the 21 range settings. And use the NASDAQ 21 range or the generic market flow. And you can change the 8 to a 21. That works too. Either way. And Alan, I'm not sure if you have rules. Why do you want more? Paul's a Yahoo. Why would you want to do what Paul does? Paul doesn't have anything else on his chart. Paul has the standard workspaces, but Paul's charts aren't NASDAQ. Paul's charts aren't NASDAQ. And guys, this goes down to it. Let me tell a story from yesterday. I love stories. Dano, I absolutely will. Um, so guys, yesterday I was playing golf. I went and played golf, and I kid you not, I played the worst round I've played in months. It was horrible. The guy that I was golfing with played his best round that he's ever played in his life. He shot par. He shot a 72 on this course. But he and I were side by side the whole time. It took me 3 shots to get to his drive, but we were on the same course, right? We both had Callaway clubs. We both had little round balls that we were hitting. We were off the same tee box and we were going for the same greens. But we were drastically different players. Drastically different. Guys, I shot a 100 yesterday. He shot a 72. In the exact same environment, we had very different results based on our abilities. So if you're looking at what someone else is doing and expecting to perform like they do without being where they're at, you're just going to frustrate yourself. Alinsky, I'll help you any way I can. And the first way that I can do it is NASDAQ. If you don't have rules, NASDAQ is going to gift wrap your ass and hand it to you every day. Because while the large chart rules are the same, the entries are different. Crude oil and S&P are a much easier place to learn. Default is 34.5 and 13.2. Absolutely. Large chart, small chart. So that doesn't change. Your large chart and your small chart will tell you everything that you need to know. But I'm going to tell you right now that the entries on the NASDAQ are different. There's conditions that have to be taken into account or you're going to get run over every day. So learn your rules, right? Learn to recognize them on those easier markets, crude oil, ES, and then take what you know and then go after that NASDAQ. Ron C., take care, man. Always good seeing you in here. My thoughts are, so let me show you the difference, right? This is crude oil, super smooth. Here's the NASDAQ. Let's do the whole day. Here's NASDAQ on the day. Here is the S&P on the day. Oh, I scrolled way back. There's your S&P on the day. So S&P versus NASDAQ. You see the difference, Alan? You can learn these awesome patterns on the S&P and crude oil. You can learn about odds favorable momentum. You can learn about no termination conditions. You can learn about all these things. But what happens on the NASDAQ is when it's perfect, it's perfect. That's okay. But there's things going on here that you don't see that make it okay to take that trade. Because a lot of times on the NASDAQ, you start to get overrun. You start to get these little bounces, this wild, crazy stuff. So I always encourage people, focus on the easier stuff first. Get your rules in place. And then, man, I'll work with you every day on getting better at the NASDAQ. I'll work with you every day on getting better at the NASDAQ, but you have to have a really good understanding of the rules first. It's going to make it easier on you. Paul, everything says down, 2 divergences. You get in at the top of the window because of it. Solid trade, man. Momentum, 50-50, a couple divergences. You take it at the top of the window, the Pineski. And it looks like it worked out all right. Nice trade, Paul. Does that make sense, Alan? I'll call you Alinsky. And that's cool. Learn easy, right? We all played T-ball before we played fast pitch. Because we had to learn how to swing a bat. All right, Dano, do you have TechSmith capture? Gary, everything says up. You get in crazy late and take advantage. Awesome. I like the way you did it, Gary. Just momentum style, letting things clear. And then Paul, 50-50 with divergence. Take it at the top of the window or no trade. I like it. It's good to have rules. All right, Dano. So let's do it together, brother. Let's take capture, and this is for everybody. So if you're still working on it, this is going to help. I'm going to hit that big red button that says capture. If I hover over just one chart, it's going to give me one chart. So I'm going to click and drag from the top left to the bottom, making sure to get my timestamps, making sure to get my price bars, because we're going to line up that entry. When I release, and Dano, are you cool up to this stage? You have to click that camera, and it gives you the image preview, right? You have Snagit? Well, then let's go through Snagit. I like Snagit better. So same thing. Top left, click, drag all the way down to the right. There's your picture, right? And it goes into your your files here. Are you comfortable? There's my entry. There's my arrows. Using the call out. I had odds favorable momentum. I had no terms. Are you cool with all this part? Can you vandalize it? Awesome. So up here, mine is set default to finish. If I go, let me show my share options. So it's going to say share up here, Dano. There's 2 ways to get it in the room. The first thing that you can do is you can just right click on it and hit copy. And then when you hit copy, you can bring it over to the room and paste it in. If you are in the pop-out version of the education room, it's going to take Control V to paste in there. It won't let you right-click and paste. You have to hit Control V to paste the image in there. And then the second way, yep, perfect. And then the second way, Dano, is if you click on Screencast, it'll upload it to Screencast. And mine shows up on a different monitor. It shows up on my laptop. But this little pop-up will come up that says Get Link. And then Control V will put the link in the room. And then it's that link, guys, that you're going to take to your spreadsheet. And it's that link that you're going to pop into your spreadsheet. So that you can come back and study it. So I like both. You can just copy to get into the room, and it gives me a great picture to work with. Yeah, it's easy to do. You can already do it. I mean, you've already done it. That's perfect. Got into a big hurry here. Can I make a suggestion? Switch these two. Do you read left to right? I'm assuming you do. I know that there's a couple cultures that don't. But if you lead left to right, Dan, you're going to be more inclined to let the large chart lead the way if you're not looking at the large chart or the small chart first. Does that make sense? And you don't have to. But since this leads the way, my eyes are drawn here first. And can we talk about your trade? Since I got you. So if we start on the large chart, whoops, do you see how we hit a midband? And your large triggers are a full bar away. We call this the gap theory, Dano. And the gap theory says that when price reaches a midband or a fib and those large triggers absolutely refuse to follow, price is likely to close the gap back to those large triggers. That's the one that I wanted to show. And it acts like a slingshot, and it literally just rockets price back to those large triggers. That's the gap theory. And that gap theory is exactly what you had going on this trade, which is why this got run over. Does that make sense? And then you're absolutely right. A little bit of patience eventually gives you a pullback to an area of support inside of favorable large triggers. And you nailed it. You said, oops, there's my recovery shot. So the key for most users, and guys, what a great way to end the classroom today. The key for most users isn't creating the ability to see these advantages, because all of you are going to see them. The hardest thing that you'll ever do is absolutely nothing. It's going to be that moment of waiting for everything to sort itself out. And guys, that's one of the great things about posting in this room is I'll hold you accountable to the rules that you write on there, right? I'll hold you accountable to your trading plan if you send it to me. And that means that you have to be receptive to my feedback when I tell you, hey, Dano, the gap theory got you. Your gut reaction is going to be to justify your trade, isn't it? Your gut reaction is, but Mark, it was green, but Mark, the smalls were above the large, but Mark. And I get that a lot. But instead, put yourself in that student role. You have the ability and the oh my gosh, the advantage of being new. And when you're new, man, Dan, take this trade every time until it clicks that one's better. Just keep posting it in the room. This is an outstanding picture. I appreciate that picture because there's great lessons there. And then Gary, talk about hurry up and wait. Just three divergences, a big blue fib, weak triggers. Some of my favorite pictures are when you guys don't take trades. And then you guys, do I have anybody in here that gets emotional mid trade? Anybody at all? You want to see a cool way to work through that? You want to see a cool way to start just knowing whether or not you have advantages? Check this out. Use your TechSmith capture. Where'd my TechSmith capture go? Hopefully that pops back up. Or you can use your Snagit. I'm going to show you guys the coolest thing ever. Oh, my TechSmith capture. Let me pull up my Snagit. You ready? Oh, hold on. So instead of taking a picture, take a video. All right? Capture a video, guys. Go into your trade before you take it. Click and drag. And now I'm on video. And now I'm saying, this is what I see. Whoops. I see this. I see that. Maybe Snagit doesn't do it for you. Hold on. I messed something. Oh, there it is. Comes off to the side. You have to hit record. So it'll count down. All right, so I was looking for a short trade and I got in and watch this. Now I'm going to go short right here. And I'm in, but I'm not trading from an area. And I notice that I'm trading directly into Fibonacci support. And I notice that the gap theory is pretty much in place. And I'm fighting multiple divergences. And I'll be darned, I got stopped out. I got in at the wrong spot and then stop it. And then guys, go back and watch your video after a trade. As you talk yourself into why you're doing what you're doing and the things that you recognize. And I'm telling you right now, it gets hard to break rules if you have to narrate your life as you do it. Play with the video, guys. Don't post videos in the room. These are for you. But I'll tell you right now, yeah, with the capture, PFI, are you going to be a professional day trader? Is that your goal? I know it is. I'm being redundant. Best one in Florida. I like it. Guys, go to TechSmith. If you want all the bells and whistles, Snagit is $64. Every bell and whistle you could hope for. Snagit also gives you the ability over TechSmith. If you're gonna do it, if you're committed, guys, check it out. Snagit also gives you the ability, well, not with a video, to paste your checklist right onto it. Is the market coming from a good top or bottom? Then you can start going through that. Yes. Odds favorable? Yeah. Trend termination conditions not true? Nope. Uh-oh. Area inside of favorable large triggers? Uh-oh. And you can police yourself like this too. And it really is. It's a small investment. I couldn't imagine. I used TechSmith Capture for a year. And my brother was finally like, dude, seriously, go to Snagit. Get the best information, go through. But I think that video feature on Snagit or Capture, guys, it's awesome when you get into a trade because it forces you to talk about it. It forces you to think about your rules, right? And you'll hear it in your voice if you're nervous. You'll hear it in your voice if you're anxious. I think it's pretty cool to do. I do it every now and then, just for fun. And there's even a feature where you can crank up your webcam, just so you can see yourself talking through it. Look at the look on your face. Are you nervous? Are you anxious? Right? Because those are all byproducts of indecision. And guys, that's it for me today. What is today? Tuesday? Today's Tuesday. Good class today. Great questions. Thank you, you people that put yourself out there, that ask, right? That say, man, Mark, I just don't get it. and it's weird in front of all these strangers to admit that I don't get it. $64, Snorri. Capture is basic. Capture is free. Capture gets you excited about the idea that you can take pictures and annotate them. Snagit is capture with all the bells and whistles. So I've got, well, I minimize mine down. I can do text like that. I can do call out boxes, right? I can do shapes. I can even do stamps, termination conditions. I can fill in areas if I want to. It's everything. It's all of the bells and whistles. Snagit also gives you the library. I've got over 6,000 pictures in this library that I can come back to in an instant and go through and take a look at. I like Snagit. I think it's worth the investment. I think $64 is a small price to pay. But I'm telling you right now, I don't work for TechSmith. I don't get a cut. Nexgen isn't on a referral program. We give you the free version for a reason because it does work, and it works well. So, guys, that's it for me today. Alinsky, thank you for being here. Adam for all. Man, welcome to Nexgen, guys. I hope that it's obvious on day one that this is your class. I hope you recognize that I really am. I'm here for you guys. 15 hours live every week. And the only way for you to not is if you don't put yourself into it, if you don't take those pictures, if you don't ask those questions. I agree. I agree more so on the software than the teacher, guys. I don't know. I'm patient. I like teaching. I love teaching. I'm passionate about it. So keep posting, keep asking. It's hard to aggravate me. The only way you ever aggravate me is if you refuse to listen. And usually you'll hear it in my voice. It doesn't happen often. Arguing with me. If you ever want to argue with me, do it offline, not in the class. I encourage everybody to argue with me, to create a discussion outside of what seems comfortable for you. But let's save arguments for outside of the classroom. Gary, you don't want to. I got a list. I'm waiting for you. Don't know. Not really. But guys, I always encourage your feedback. Send me an email. Tell me that you don't understand the way I'm presenting something, and I'll find a way to present it so that you do. I guarantee it. I've done it in the past. And every time I get challenged on a concept, I become a better teacher, and you become a better student. So challenge everything, guys, but challenge it in a respectful manner. And I'll see you guys tomorrow morning. I'm going to go be a high probability trend trader. I'm going to go look for the best of the best, see if we can't pluck a little money out of the market today. Be good, everybody. Thank you for being here.